Good afternoon, everyone, and welcome to a special joint meeting of the Wilmette Police Pension Board of Trustees and Wilmette Firefighters Pension Board of Trustees at 2 p.m. on Monday, November 16th, 2020. This is a call to order. Staff will now call the roll.
Mr. Canning?
Here.
Mr. Grajewski?
Here.
Ms. Malloy?
Here.
Mr. Mitchell?
Here.
Mr. Weglar's here.
Over to police.
Hi, Pat. Could you do the roll call, please?
Mr. Farina? Mr. Kinzel?
Here.
Mr. Collins here. Mr. Sokolnik?
Here.
Mr. Paulson?
Here.
We have all present.
Okay, so we have a quorum for both police and the fire boards. Because this is a virtual meeting, we have a statement that we read into the record. This meeting is being conducted remotely via Microsoft Teams. For those watching this video in the future, effective June 12th, 2020, Public Act 101640 enacted the Government Emergency Administration Act, which makes permanent changes to Illinois' Open Meetings Act. Under new Section 7 sub E of the Open Meetings Act, excuse me, public bodies may now conduct remote public meetings by audio or video conference without a quorum physically present when the governor or director of the Illinois Department of Public Health has issued a disaster declaration related to public health concerns. Today's meeting is being broadcast live on our local cable access channel 6. It is also being broadcast on the internet on YouTube Live, and the URL for that is www.youtube.com/user/Village of Wilmette/live. If you'd like to participate in the meeting, you may ask the Microsoft Teams app on any device for free. No sign-in is required. The link to join each meeting is posted on the website calendar at www.wilmette.com/calendar. Today's meeting will be archived on the village website as we do with our other televised public meetings. A remote meeting obviously requires a different mechanic for public participation, so to ensure that our residents, business owners, and other interested parties have the opportunity to participate in this meeting, we've solicited public comment prior to the start of the meeting via email. If members of the public who are watching the broadcast would like to participate during our designated public comment periods, you may submit your comments through the YouTube Live at the appropriate time, and a member of the village staff will read your comment to the pension board. All comments to the pension boards will be recorded in the meeting minutes, as we typically do. Everyone will have joined the meeting today muted. When it is time for public comments, those joining us with the Teams client can toggle their mute status by clicking on the microphone icon on the meeting toolbar. Those joining us by audio conference dial-in can toggle their mute status by pressing *6. Only attendees can unmute themselves. No one can unmute another attendee. And just a reminder, the public comment can also be provided by emailing public comment, all one word, at wilmette.com or through the village's YouTube live stream. Now, before the meeting, Pension Board Trustees received a packet of agenda materials. These materials are also posted on wilmette.com so that residents and other interested parties can review the same. You can also read them as we go through the meeting if there's something that you'd like to learn more about. I will now move on to the items on the agenda. The first item on the agenda is public comment. Have we received any public comments, Lynn?
We have not received any emails there are no YouTube Live comments at this time.
Okay. And is there anyone on the phone or on Teams that wants to make a public comment at this point? Hearing none and seeing none, we'll move on to the next item. First item, it's up for you, Dave. Please.
Oh, is this for the approval of minutes?
Yep.
Okay, can I get a motion to approve the minutes from the joint meeting on October 22nd, 2020?
Motion, Kinzel.
Can I get a second?
John will second.
Second. Okay, so we have a second. Can we get a roll call? Farina, yes?
Kinsel, yes.
Collins, yes.
Sekolnick,
Sokolnik,
yes.
Paulson,
Yes.
Okay, so there's no modifications, adjustments, or clarifications. We can move on to you, Chris.
Okay, next item on the agenda is the approval of minutes of the joint meeting for fire on October 22nd, 2020. Is there a motion to approve?
So moved.
Okay, moved by Mark. Is there a second?
Second, Krajewski.
Second by Dave. Any comments, corrections, clarifications, modifications, or amendments?
Chris, on page 16 of our packet, number 9, miscellaneous, item C, we have Melinda making a motion to table. I think we need a second on that.
Which,
Roman numeral 9, miscellaneous, item
yeah,
C,
there,
review and update
Sorry,
on the
C.
investment statement.
Right. I don't see that there's a second there.
yeah, my guess is Mark would have made the second.
I believe I did.
Okay, why don't we amend the minutes to reflect that?
So moved.
Jason, you got that?
Yeah, I got it.
Okay, so, Mark, you're making a motion to amend.
Yes,
Linda,
to
do you
amend.
want a second?
Second,
Krajewski, second.
Okay, roll call, Jason, call roll on the motion to amend.
Mr. Canning,
Aye.
Mr. Grzewski,
Aye.
Ms. Malloy,
aye.
Mr. Mitchell,
Aye.
and Mr. Weglars, aye.
Okay, so the amendment passes. The minutes as amended will be reflected. Are there any other amendments to the minutes? Hearing none, Jason, can you call roll on this?
Mr. Canning,
Aye.
Mr. Grzewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, and so those minutes are approved. Next time on the agenda is pension trustee update. I don't believe we have any, Linda.
No updates at this time.
Okay, next item is pension membership changes. I don't believe we have any changes.
That is correct.
Next item on the agenda is financial data. I don't believe we have any at this time.
That is correct.
Next item on the agenda is investment report. I believe that was covered at the October meeting and there's nothing additional to report at this time, correct?
Any addition is going to happen later on in the presentation under Tom, when he is
Okay.
talking about some things.
Next item under miscellaneous is conference, seminar, training, discussion, and approval. I don't recall seeing anything new under that item. Does anyone on police have anything?
Yes. So for our transition training, IPPFA will have police 4-hour transition either the end of this month or beginning of December. That's going to be online. This training will meet our standards, which is basically different than the fire because it's got to go through a college. They worked with NIU on it, so. And since we're members, it'll be available to us to take.
Okay,
You know the
anything
date
on the
of that,
website?
I didn't
Was
catch
you,
that.
Mark?
Say again?
I just asked if you know the dates of that.
It's going to be online.
Okay. Okay.
So while Pat was just talking about that 4-hour training, we've had this on several of our agendas, so I'm just going to remind folks again, and there's been emails sent out both by FPIF as well as Carolyn has forwarded on information, I believe, to the fire trustees. We also are required to do 4 hours of training that needs to be completed before the end of this year. They have it in 2 2-hour sessions. If you couldn't sign up when it was originally sent out, it's my understanding that it's still available out there. So the links for the webinar is in emails that have been sent before. And I'm sorry, we're getting an echo now. Does somebody have more than one device when you're joining the meeting? Okay, because if you do, make sure you shut one of the devices off, otherwise we're going to get the echo. So again, there are two webinars out there for Fire to Complete, their 4-hour training. If you have any questions, send me an email. I'll forward you the information again. I did attend the webinar that was hosted by the FPIF on Friday regarding the transition, and I will send out the material related to that either later this week or before our next meeting.
Okay,
Hey, Melinda, it's
anything else?
David.
Anything else?
A quick question on that, Melinda. The training in the past, my continuing education, which I'm required for my licenses as different things I do, was sufficient. Do I need to do this training now? Or I thought in the past I could just submit my certifications for my continuing ed requirements for my current job?
That's a great question. And you are correct in terms of your understanding about what you needed to do to satisfy the 8 hours of training that's required on an annual basis. This is something separate. So you do need to attend 4 hours of training.
Okay.
I know, that's a happy face.
That would be a correct assessment.
Okay, anything else on training? Okay, Melinda, can you tell me if Carolyn's in? Because she's emailed you and I.
No, she has not joined. And I will stop sharing my screen and let me see if I can see what's going on.
Okay, because she thinks she's in a waiting room.
I do not see anyone sitting in the waiting room right now. So I'll keep looking into that. We can start then, if you'd like, Chris, with the next items that Tom is really going to be leading.
Yeah, no, I would like to move on with those, but what I need to do first, under new, old, and unfinished business, first item is a manager review, London small cap managers search. I need a motion on the fire side to remove this from the table. A motion, a second.
Krajewski motion.
Melinda, you second?
I will second.
Okay, roll call.
Mr. Canning,
Aye.
Mr. Grajewski,
Aye.
Miss Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, so it's removed from the table. Fire, you want to do the same thing, please?
Yes, can we get a motion to make the removal, please?
I'll make that motion. Marty.
Okay, Marty made a motion, a second. We got a second there. I couldn't hear who that was, but could you repeat that? Who seconded it? Did you get that, Pat? It kept breaking up for me.
John Skolnick.
Oh, okay. Okay, terrific. Thanks. And then all in favor, aye. Serena's an aye.
Kinzel, aye.
Collins,
Skolnick,
and I.
aye.
Skolnick, and I. Paulson.
Paulson's and I.
Okay, motion passes.
Okay, Tom, the floor is yours under London.
And
if we
I'm
could
sorry,
maybe-
Chris. I apologize for interrupting. Just so you know, Carolyn has now joined the meeting.
Okay. Welcome, Carolyn.
Hello, I don't know if you can hear me okay?
Yep.
Yes.
Okay,
So Carolyn, where we are, we're going to start with a manager review by Tom McShane. So you can listen in. We're going to be talking about small cap and emerging markets, and then investment policy, and then we'll get to board rules. So you're about 3 items down on the agenda.
perfect. I will just work on other things and sit tight.
Okay, great. Thank you. Tom, the floor is yours on London small cap manager search.
Okay, good afternoon. I am looking at page 18 of 225 on the report from Melinda that she put together. And it would be titled Review of Small Cap Manager Search.
So I'm sharing that page now, Tom. So I have it up on the screen, folks.
Okay, thank you, Melinda. And so Jeff from the police department and Dave from the fire department, we had met. We had provided them with significant data in reference to small cap managers and international managers, but particularly here, the review of small cap managers. What was provided was Morningstar report. We had a side-by-side analysis from Morningstar of each manager. We had our in-house at Morgan Stanley Greystone's research on the managers, and we particularly looked at Aberdeen U.S. Small Cap, J.P. Morgan Small Cap Fund, Royce Penn Mutual Fund, and then Wasatch Small Cap Value Fund. The board or the committee had come after much discussion, had recommended Wasatch Small Cap Value Fund, particularly a couple items. One is the people. The Jim Larkin has been there since actually 1999, and is supported by a strong research staff dedicated to small cap companies. And just to expand a little bit, they are pretty much a small cap house. They run a growth portfolio, a core portfolio, and they have some micro portfolios, and they have a process that's clearly stated, a discipline of what they want to own is, say, growth companies whose valuations are mispriced, and they're mispriced as a value stock. And so it could be a fallen angel that say a growth company that hit a bump in the road and their earnings have been disrupted. They'll look to position a company like that. And but they also, the firm itself, Jim Larkin, every year they have twice a year they have a anonymous survey of the companies they own and the management of those companies, so other analysts can be fairly untainted in their opinion. They're not worried about disrespecting the manager, Jim Larkin, of the fund, and it provides for some insight. The management of the companies that they purchase in the mutual funds, it's an important aspect of what they do as far as understanding and being confident about owning those stocks. Performance, they've outperformed the benchmark 6 of the last years net of fees, and were fairly consistent in that aspect. And then their expense ratio is 1.2%, which is expensive. Not expensive. I mean, I would say that it's in the upper mid-range of the small cap managers.
Tom, can I stop you for a second? Can you
Sure.
can you remind folks what the actual expenses for London? I think it's 0.42%. Does that sound
Right.
correct to you? Okay.
Right. London is a separate, separately managed account, and it was done through Morgan Stanley or Greystone, where they were. London is like a sub-advisor, and so we were able to negotiate as a firm, those fees. But the fee of 1.2% is looking at the other managers. One was 99 basis points. Let's see, I'm looking for my notes here. One was Aberdeen was 1.1, J.P. Morgan 1.1, Royce, Pennsylvania 94 basis points, and just the Russell 2000 index is 10 basis points. So I don't know if Jeff, wants to jump in, or how we want to proceed on this, and as far as
at this point I've got nothing to add, Tom.
Okay.
Dave, do you have anything?
I only have one question, and I have to go find where it was. But when I was looking at the Morningstar reports, what is the different gold, silver, bronze thing mean? And because it was just odd that I'm pulling up what London was, but does that have any meaning in terms of the quality of the fund? Is that something else?
Well, what it means is they look at, I believe let me just get my notes here. They look at the managers, they look at the process, they look at performance, they look at pricing. And if you have, and so if they're all highly acceptable, then they come to gold, and then they get silver, bronze, and then no rating at all. So it's a kind of allows for a quick look at a mutual fund and say, hey, well, it's worthwhile to look again.
Yeah, I'm trying to pull up, but I think it may have been the other one recommended.
If you go to 46, that's the page that shows the one that we're considering right now is rated gold. Is that what you were talking about? Those kind of standards?
Yeah, you know what? I think it was the international fund that was rated bronze, and I was curious about it. What it was. Never mind. Okay, I was just kind of curious what that was, because there's like the star thing and then the gold, silver, bronze, and so gold is it's 4 stars, but it's gold. So I guess that's just seemed odd. So I didn't quite get like, you know what I mean?
You mean it should have been 5 stars or something?
Well, I don't know. If you're gold, you would think you'd be 5 stars, right?
I don't.
It could, just curious. No, I was just kind of curious what it really didn't. It actually wasn't this fund that caught my attention. It was the other one we're looking at that, now that I remember, it was 5 stars in bronze, which made no sense whatsoever. So, but since we're not talking about that, we have to worry about it.
I have a question for the committee. What did you see as the big difference between the fund you're recommending and the JP Morgan fund?
Tom, this is Dave Grajewski. Correct me if I'm wrong, is when we were looking for small cap value, is that we found that Wasatch, a lot of these blends were kind of favored more towards growth. And if we were looking at the underperforming value sector, that Wasatch was one that more hit what we were kind of looking for. That's why JP Morgan might have done better, but a lot of it was focused in on heavier percentage in growth.
Yeah, I think that along with that, Chris, is that JP Morgan was a lot more mid cap than it was small cap, and that they had maybe 30% in mid cap, whereas the benchmark is 12%, and the Wasatch was closer to like 15. And JP Morgan, just look at. Okay, so then, and following up with what Dave was saying, is that there was more of a growth tilt there, and more growth oriented than it would be, let's say, core to value. And the performance for JP Morgan, I'm looking at the JP Morgan emerging market. So yeah, that was, I think, the 2 aspects that made a difference when we got down to the end.
So this is Melinda. I have just a couple questions here. And one of the questions is going to be, because it's unique to FIRE in the additional index fund that we already have in place when it comes to small cap. But if I understand what we're talking about, right now we currently have roughly 3.3 million with London. And the idea right now that's being proposed is half of that is going to go to, why can't I say this right? Wasatch. Half would go to Wasatch. They're going to be active and they have a value slant. The other half that's being proposed would go to a small cap value index. So we're looking to take all of the 3.3 million, half it's going to go to active, half of it's going to go to an index, but it's all going to be value tilted. And FIRE right now has a little over $500,000 in an S&P, I think you and I talked about this, Tom, a core index fund. So does it make sense right now that we, number one, how fire is laid out? And is there a reason why we want to take all of the 3.3 million and put it all into value? Do we want some balance here between growth and value?
You asking me, Tom McShane, or you were asking the committee?
I'll ask you, Tom, and then the rest of the committee to chime in as they see appropriate.
So my thought is that, and I say with this, do you want an active manager? One is make that decision. Two is if it's an active manager, is Wasatch your active manager? Those are the two questions I think should be on the table now. Whether you split it up to a small cap value index or a small cap core, I think is the second question, or if you split it up at all. So I think the first question to address before we start, the aspect of, I went into the committee meeting looking for a replacement of London Company, and those candidates you have, a lot of data that's there, and a lot of decision making from the committee has been dwelled and pushed around. And one of them is to say, well, they think Wasatch is a candidate to replace London. And to address it a little bit further, if I could, with Wasatch, is that they are a small cap value fund. The name value is a lot of times not always. They're closer to a core. They're a value manager at a reasonable price, where they're not going to be deep value. But be as it may, are they a good replacement for London? Is active management a good replacement for London? If it is, then the committee looked at this and they said Wasatch would be a good replacement for them. And that's, I think, is where one we should address first. And then two is, do you want to split it up? That's the second question. It came up from the committee that was from the committees thought that highly that the value that we're not generally for the fund exposed to value, and that's where that second aspect of this came into play. So that's just my thinking. I kind of getting into the weeds with the splitting up and whatever. I think maybe that's just my thought, is taking one at a time. And do you want active management? Is Wasatch a good replacement? And then you can figure out how much, and if you want to use what index, because that wasn't really. The small cap value index play is kind of came in from the committee meeting. It wasn't really from the board meeting.
Yeah, this is Jeff. I just want to add something. I was the one that came up with the idea to split this into active management and a fund, and the reason I did was because I think we ought to get exposed to value, which I don't think we have any of, other than Lazard, which we're about to fire. And Wasatch, as Tom said, is a blend fund. So they've got a good long-term record, and there were some concerns about committing all of this to value, even though it's a very small percentage of the entire assets in the funds. But that's why I wanted to get a pure small cap value exposure in there.
Okay, so Jeff, can I just ask, so even though we're saying that the active manager is value, we're saying, or that they're characterized as value, they're really not a pure value index or active manager?
Correct. It's just in their name. They're not characterized by, I believe, both of the style descriptions that we saw. One was Morningstar, and I'm not sure who does the other one, Tom, but there were two different style representations, and they were not value under either one of them. And Tom described that they look for growth stocks that are at a reasonable price or fallen angels. So even by their own investment style, they're not what I would call pure value.
Okay.
This is Dave. That's page 25 in the packet. It shows the style matrix.
Also, just looking at their PE and price to book and comparing that to the Russell value small cap, you can see that the PEs are quite a bit higher, and I believe the price to book is quite a bit higher too.
Okay, so with that being said then, and the way that Tom was laying it out, in terms of taking each question one at a time. So we know there is 3.3 million roughly that each of the funds have with London. So the first question that we're answering is, do we want to take all or a portion of it and give it to an active manager? And if so, is it the one that the committee is selecting right now? So I guess that is sort of the first question that's out here.
Well, on the fire side, I would have Dave make the motion to do that, take everything from London, and then have a second and have a discussion.
Can you repeat that, Chris?
Sure. My thinking is, why don't you make the motion? Because the idea in my thought was we were taking everything out of London. So the motion is going to be to take it out from London, and then the second part of the motion is where it's going to go. Then we can have a second and have a discussion.
Okay, I'll make the motion to take everything out of London and per the committee's recommendations, split that between half going into the active Wasatch and the other half going into the small cap value ETF.
Okay, is there a second?
So second.
Okay, it's been moved by Dave, seconded by Mark. Melinda, thoughts?
The other item on the table really for fire, and we don't have to take action if folks are comfortable with it. We also have then a little over $500,000 with another S&P index fund. We had done that back a while ago. I think it was last year when we were allocating funds because we wanted more exposure to pure small cap because we felt like we didn't have it in the portfolio. It's more of a core fund. So we would have two different small cap index funds. So one is going to have, over $1 million in it, and the other one will have $500,000. I'm just so that folks are thinking about what that means. I'm not saying it's a bad thing. I just want to make sure that that's what we want to do.
Well, at this point, I think I'm inclined just to leave it alone and make the move out of London that we've been, researching and now taking the committee's advice. And we can address that small fund later.
I would agree.
Okay, so
Okay, Jason, do you have anything?
No, I think I would agree with that as well. I think, just to get it out of London.
Okay, Dave's made the motion. Mark is seconded. Jason, can you call roll on fire?
Yeah, let me be clear. Half of it's going to Wasatch and the other half is going to, which fund did we say?
Dave?
It is the Vanguard Russell. Let me see. Is it? Sorry,
Small cap value index fund.
Small cap value index fund.
Okay, Russell Vanguard Small Cap Index Fund. Small Cap Value Index Fund. All right, Mr. Canning.
Aye.
Mr. Grajewski.
Aye.
Miss Malloy.
Aye.
Mr. Mitchell.
Aye.
Mr. Weglars. Aye.
Okay, so that motion is carried on the fire side. Over to police.
Yeah, it's David here. A couple things, guys. Would you like any further discussion on this? One thing I will add, just from my own personal experience, haven't worked directly with a small cap value fund at Wasatch, but over the years, I've worked a lot with the Wasatch people, both as an analyst and as an investment banker, and they're first class. I mean, just one of my favorite fund groups. I mean, again, I can't speak to the particular fund, but I'll just throw that out there for what it's worth. I really do think they're first class. Gentlemen, any discussion on taking the funds and moving it to Wasatch and the Vanguard Value Fund? I mean, small cap fund. Is that what we want to do? Thoughts, discussions, commentary? Pat?
Well, I've already spoken already, so I'm obviously in favor of it. But just to get my voice out, that's it.
Okay, well, if I don't hear anybody with any commentary, I'll do the first motion to remove all the funds from London. And then the second part of that motion is to move half to the Wasatch Small Cap Value Fund, the second half to the Vanguard Russell Small Cap Value Index. We could get a motion for that?
Motion, Kinzel.
In a second?
Collins, second.
Okay, so we have a first and a second. Farina is an aye.
Kinzel, aye.
Collins, aye.
Sokolnik, aye.
Paulson, aye.
Okay, the motion carries. Chris, back to you.
Okay, next item is we need a motion to remove the manager review Lazard emerging market equity search from the table. Mark, can you make that motion? Or Dave?
Yeah, I would move to remove replacing Lazard Emerging Markets Fund from the table.
Melinda, you're a second?
Second.
Okay, it's been moved and seconded. Jason, please call roll.
Mr. Canning,
Aye.
Mr. Grajewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, so it's been removed from the table by fire over to police.
Can we get a motion to remove the Lazard Emerging Market Manager search from the table?
Motion. Collins.
Need a
Second.
Okay, a
Skolnick.
second, please. Second, Skolnick. Okay, Farina's an aye.
Kinzel, aye.
Collins, aye.
Paulson's aye.
Sokolnik. Okay.
Okay, it's been removed from the table by both police and fire. Tom, you have the floor to report on the committee.
Okay, so looks like starting on page 19 of 225 is the note regarding our review of the emerging market mutual funds. And the purpose of that review is to replace the Lazard Emerging Markets Fund for underperformance of return. And the candidates were one, American Century Emerging Markets Fund, American Funds New World, which is already owned by the fire and police, and duly noted that they have less exposure to pure emerging market stocks. Third candidate was Causeway Emerging Markets, and then last was JP Morgan Emerging Markets Fund. And again, with the data and discussions and the give and take, the committee had recommended JP Morgan Emerging Markets Fund, and partly the people there, Leon Eidelman and Amit Mehta, have been together since 2013, and it's the process is they clearly adhere to their investment strategy. They buy high quality companies with robust growth profile. So they are kind of growthy, but at a reasonable price. So where let's say maybe they buy a core portfolio, and it might tilt towards growth. But it's they're of all the managers, they were not Causeway was too, but they were more pure emerging market portfolio. And the performance, they've outperformed the benchmark for the 3, 5, 7, 10 years. And that could be the kiss of death, but it's also, they've been consistent, not just in a one big year type of performance. And the idea from the committee was that their long-term performance was competitive with American Funds New World, even though the American Funds New World had two key advantages. It was higher weight in growth stocks, and it was at a significantly higher weight in U.S. stocks. And the pricing was at 1.09, which is, again, reasonable. Lazard is 1.08, American Century 1.05, American Funds New World is at 60 basis points, Causeway is at 1.16, and JP Morgan is at 1.09.
So Tom, one of the things is the fee is, I think, the same as what Lazard is right now, correct?
It's 1 basis point higher, I think. Yeah,
Okay.
so it's basically the same, yes.
Yep.
Yes.
So Dave or Jeff, do you guys want to chime in on your thoughts?
This is Dave. I think Tom said it pretty well in that JP Morgan did, as well as American funds, and there's JP Morgan's pretty strictly focused on just the emerging markets, where American Funds New World had a lot that only needed to have a percentage, of their assets or a percentage of their, business in the emerging market fund. So, they were favored in that they were having that growth with the, more domestic companies. So if we're looking strictly emerging markets, that's kind of where JP Morgan came in. And I know Jeff can add more to this.
Yeah, I've got really nothing to add. I mean, our view was, if we think, based on what Tom has said, Morgan Stanley, and what I'm aware of, is that emerging markets have been terrible over the last 10 years, just starting to show some traction this year. And looking out 10 years, I think it's a good place to be. So given that emerging markets is a pretty small exposure to begin with, we're diluting that by putting it in the other fund. So do we want emerging market exposure or not? And the answer is yes. And again, as Tom said, American New Worlds was quite growthy, and this fund is growthy, but not as much. And I think closer to between a blend. I'd have to look at the style, but I think somewhere between kind of a blend and growth style.
So with that, just to give folks another couple other facts. So right now, each fund has roughly about 1.2 million with Lazard. Remember, at our last meeting, we moved 800,000 out of the fund because it had close to 2 million, and we gave it to American New World. And I was just trying to see if I could see where American New World is right now. So American New World, I think for each of the funds is roughly $2 million. I don't have any more comments or questions about this unless somebody else does.
So the idea is we're just going to move this lock, stock, and barrel from Lazard to JP Morgan?
That is correct.
Okay, on the fire side, Dave, do you want to make that motion?
Yes. I'm going to make a motion to withdraw all the funds from Lazard Emerging Markets Equity Fund and move them all to the JP Morgan Emerging Markets Equity Fund.
Okay, Melinda, can you second?
Second.
Okay, any further discussion on fire? Hearing none, Jason, can you call roll?
Mr. Canning,
Aye.
Mr. Gajewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars. Aye.
Okay, that passes on fire. Over to police.
Okay, so can we get a motion then to move from Lazard to JP Morgan Emerging Markets?
Motion, Kinsel.
Second.
I'll second it. Paulson.
Okay. Also, is there any further discussion on this topic, gentlemen? Hearing no further discussion, Farina is an aye.
Kinsel, aye.
Collins, aye.
Sokolnik, aye.
Paulson, aye.
Okay, that sounds like it passed on police.
Sorry. Yeah, it passes, sorry.
Yep.
Back to you, Chris.
And Melinda, do you need anything else from us?
I'm good. I've got my direction.
Okay. Our thanks go out to the committee members for taking on these added responsibilities. We appreciate it, and all the work you did to short circuit it for today's meeting. Next item on the agenda is an investment policy review and update on the fire side. Can we get a motion to remove that from the table?
So moved.
And the second?
Krajewski seconds.
Okay, move by Mark, second by Dave. Jason, please call roll on the motion to remove the item from the table.
Mr. Canning,
Aye.
Mr. Gajewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars. Aye.
Okay, so that's been removed from the table by fire. Over to police.
Please, can we get a motion, please, to remove the investment policy review and update from the table, please?
Motion, Kinsel.
John will
Second, please. Okay, any further discussion? Okay, Farina, aye.
Kinsel, aye.
Collins, aye.
Paulson, aye.
Okay, motion passes.
Okay, it's been removed from the table. Tom, over to you.
Okay. So I believe it's on 133.
Yes.
Okay. And hang on 1 second. Okay. So just to go through this, there was some changes, and the changes, this was prompted by the fact that we haven't reviewed it for a while. We have return over a period of time. We've added to achieve a return greater than the actuarial rate of return. And, we added the S&P 500 as a secondary goal for, as far as a benchmark that would be included, not just, I think we had before was the Russell 3000, which doesn't really reflect, most where the fund's at. And this is really to kind of give the idea that we're going to compare it to a benchmark that represents the allocation to the fund. Looking at going to page 130, I keep going. Let's see. So page 137, this is partly prompted to look at is the Sustainable Investment Act, where the board will consider any material relevant and decision useful. The language that was provided from the statute, and depending upon who it addresses that. We got it off from another attorney, and so what we do at our firm, we have a ESG group, environmentally sustainable group, or whatever that. It's a whole division now that will allow for ratings on, let's say, mutual funds, stocks, so we'll be able to provide. I thought I don't really have a total plan how to report on this, but I suspected that that we would use, let's say, January or mid-year, just to provide a rating for the securities in your account. And the Morningstar has ratings between 0 and 50, 50 being the highest risk in reference to sustainable investing. So we have the capabilities to provide these type of ratings, or that saying that these factors were considered.
Tom, can I ask a question?
You can. It's your show.
No, it's not just my show. But in regards to this, Tom, as we just went through the selection process that we did, was this sort of ranking or grading in the material? Would we have somehow reviewed this as part of the process we just went through?
In the sense of keeping you guys out of the weeds, it wasn't mentioned, but in the information we have, and the board has had, there's echoes was significant, but
Melinda, who's DF?
I'm sorry, who's whom?
The initials DF.
That would be Dave Farina, I'm gonna guess.
No, he's on the
No, I
picture.
just turned myself on mute.
He's on a picture. There was somebody else. All right, forget it.
Okay. On a 0 to 50 basis, the funds that we looked at were all rated between 25 and 27 by Morningstar in reference to the sustainable investing. And we can, they didn't say how to report it in this act, but I think that it was considered that we didn't want to own that what was the high risk and sustainability. So this is a work in progress in reference to how important this is and how it affects. We considered it. We considered it, and I would say that's a major factor here, that we considered the sustainability of these mutual funds, and we use it. We use the rating by Morningstar to consider that sustainability.
So Tom, would we want to put a line in this just saying, given that we use mostly mutual funds and we really don't know on a week-to-week or month-to-month basis what these people are investing in? I mean, we obviously have their buckets, but between meetings, between whenever that we do not necessarily know every holding of every company that we have investing for us. Like we have no way of knowing, that Lazard Lazard's a bad example. Wasatch just didn't decide to, invest in an oil field somewhere or something. We have no way of knowing that, short of, looking at the end of the quarter and what they own. So, what I mean?
But Dave, what the rating would be on the fund itself, not so much like for instance, if they owned 50 companies and one of them was a polluter, that they may still get I'm thinking this. I don't know for sure. This is not something I've done an in-depth study on, but I would think if they had 40 stocks and one of them was a polluter or whatever, and or a tobacco company, the rating would still be close to the mid-range if all the other ones were of higher quality in reference to their sustainability. And so when they rate them, Dave, they rate the mutual fund itself, and probably take some kind of weighting for the individual securities held in the portfolio.
And Tom, all I'm saying is, and it's probably a good point, but we truly, as a fiduciary of this fund, I don't want to be sitting here going, well, gee, did these guys buy Exxon or whatever the bad stock is today? I don't know. You know what I'm saying? So, because we just don't know, and it seems like that's beyond the scope to ask this committee to be completely aware of the 12 or so mutual funds that we are using as to what they're investing in. So I don't know whether we put something in here saying when we evaluate new funds, or, once, you know what I'm saying? Because like we really have no idea today what any of our funds are investing in, short of like kind of going, individually through their stocks. And that's why we hire them, right? So, and we haven't given them the mandate, or, we're not investing in it, you know what I'm saying? So I don't know, or maybe it's just a mute point. We just have to look at it when we pick these things. I don't know.
Yeah, I don't know either, Dave. I think it's another burden on the fund. And it says the board will consider, and it's, would, any material relevant and decision useful, sustainability factors within the bounds of, your fiduciary prudence in evaluating investment decisions. And so, the such factors include but not limited to. The bottom there, this is I got this language from an attorney. Maybe your attorney has a more expansive one there. But yeah, I mean, I hear what you're saying, and it's do you look at the fund? Do you look at the holdings? How often should you have to do this? But maybe you put in here, this is at the time of purchase, it's considered, or maybe you put in there that it will be maybe what if this is a concern, then maybe what we can do is maybe one, you can accept this policy as is with the changes. And then two is you can put on the agenda to, look into this policy, a direction of how you would identify or how you would define, consider, or what you would look for in reporting. Something to add to this that, maybe once a year we'll review the sustainability of each fund in the pension fund, and provide a rating, because that's something that is easy enough to do. We could make a list of all your mutual funds and get the ratings that's available from Morningstar. I don't if they have. I have to look at if they have them on the index funds, but they certainly have them on the mutual funds. So, or you could come back and revisit this before you approve it at all. So, but no, good point. I just these laws are made, and there's not, it sounds good, but then there's nuances to it, Dave, and it puts you guys, back to the wall.
Well, Tom, don't you think that, all of these funds have their own batteries of lawyers who are aware of this new Illinois Sustainability Investing Act, and they're going to have to be flexible with it as well?
I'm not an attorney, Chris, and it does. I don't know if it says that they have if they have to be the mutual fund. You know what I mean? I don't know if that's the case. If they're not going to manage your fund, Wasatch will not manage your fund different than they would manage, because it's one mutual fund. You're buying into their investment policy. So,
right. I'm just thinking from a marketing standpoint, they have to be aware of the laws in the different states in which they sell mutual funds.
Right. Yeah, and I think in general, what they're aware of is the marketing aspect of being in sustainable, taking into consideration sustainable investing. And you're right in that case, that's the new thing out there. Is that there's, again, our firm has a whole department dedicated to that. And so yes, I think they are looking at that in general, and people visiting. Wow, the aspect of does good sustainability investing add value to returns?
Does somebody have more than one device on while they're signing in?
Mitchell.
Okay. All right. I can tell you, if you guys had a chance to look at what is going to be discussed by Carolyn in terms of new rules for the board, there is a section that has been added in regards to this new act that was passed by the state. And that was going to be one of the items to have her discuss with us further. I don't think we have a choice as to whether or not we want to put this in our investment policy, because to the point that Tom is making, it's a part of it. But the discussion in terms of how this will be implemented, there is some guidance that Carolyn has included in the rules that she's given to fire. And it looks like it is, again, an item that needs to be considered at the time that we are making investment decisions. And it does seem to indicate that this would be something that we would review on a regular basis as well.
Melinda, you're talking about page 214, the 4.05 investment rule?
That's the one. What page was it? Because I have the hard copy. Tell me now.
214 in our electronic packet.
Here we go. So Carolyn, I see.
Do you want to get Mark out of the lobby?
Yes, I can get Mark out of the lobby again. Carolyn, do you have an opportunity to give some of your thoughts about section 4.05? It has to do with the Sustainability Act. Can you talk to us a little bit about that?
Sure. And this is a new law that you don't really have a choice. You absolutely do have to comply with it. And to comply with it, the first act you need to do is to include it in your investment policy. Beyond that, I would not overthink it. It's just going to be a factor that you take into consideration. And the language you see in this policy, and very much like what Tom has tracked into your investment policy as well, is the words right out of the state statute. So I would suggest that you don't deviate too much from the words of the statute, that you just adopt the statutory language as it's presented to you, and not try to overthink it in terms of modifying or putting caveats on it. It's just going to be another factor that you'll take into account. And I think Tom did a good job of describing some of the things that are done at the front end from his perspective as he brings investments to you, so that you're complying and documenting what you need to again show that you've taken these things into consideration.
Okay, are there any other comments then regarding this or any other questions about this section?
And Carolyn, thank you for that clarification. Tom, by the way, is there anything else you want to flag for us?
I think that's.
I think on page 139, Tom, do you want to talk about that?
Well, 138, I did change the minimum and fixed income investments, and that's based upon the ability to, if you're going to heavy cash or a higher level of cash and you're fully invested in stocks, you don't want to have this minimum of 33%. 20 gives you more latitude. We have our targets, but you don't want somebody to come say you're not in compliance with your investment policy because you're 31% and not 33. So we put it down to 20 and it gives you room. So that was, if there's any questions with that. And then 139, I'm sorry, any questions on that allocation change or the minimum maximum change? Okay. So on page 130, we restated, I think on a more concise basis, the idea of how you can invest in 65% equities. And we had language that would included in the past, it included you had a graduated increase of what you could invest in equities, 50%, 55%, and that was in 2012 and 2011. So we're past that. That's 8 years ago. So we got rid of some of that language and just really kind of try to make this a little bit more readable and concise. And what this really says is that you can invest in up to 65% in equities, and that's the net asset value of the fund, and that the first 55% of the equity portfolio can be invested in individual stocks or mutual funds, but any investment vehicle in equities over 55% can only be invested in mutual funds to reach the allowable percent allocation in equities. And this is again these lawmakers work so hard downstate that to get everything so clear, and this had to be interpreted. And so you could put 55% in managers, individual stocks that with investment advisors that buying IBM and Amazon. But if you want to get to 65, from 55 to 65 has to be in mutual funds. That's what it says.
Tom, a couple of points.
Linda, do you detect sarcasm there with Tom's statement?
Oh yeah, yeah. I wanted to make it clear, Chris. Exactly.
Just checking.
Tom, a couple points of clarification, and again, it may be a technical issue or a mute issue, but two things. One, oftentimes, and maybe we want to pull a line about this, there may be, brief periods where our allocations exceed 65% because of, quote, extreme market moves. So like we don't always, we've had periods where we've been at 66, 67 simply because the market's moved up that much. And so I don't know whether we want to, put that in there or acknowledge it, because we say a maximum and then we're, I know multiple case. And then the second thing is, do we want to specifically call out, beyond mutual funds, exchange traded funds, or is that considered a mutual fund in the general scheme of things?
Well, no, I mean, we from our firm, we don't think exchange traded funds are permissible by state statutes. That's our firm's opinion, and we've shared that with the board before. I've left.
Okay, we'll take that one out. Okay.
But I mean, I put it in here as one of your permissible investments because you have them, and obviously you are allowing them to be permitted, and it's. But there's been, that's been a discussion point from other funds and other attorneys feel differently, and I get that. And it's, but I wouldn't put that in there. But I think maybe, well, I don't know if it's, here's the thing. We generally look to rebalance by year end, right? Isn't it been our history? Anybody?
Yes.
Yes.
Yeah, we try to get under 65%. Right. So, but let me just finish what I was saying. So by year end, we have a rebalancing strategy that by year end, we want to be under 65%. So when you go to the Department of Insurance, you're there. I'm not sure, and if Carolyn's on the phone, I'm not sure if it's in the statute or it's been an opinion from the Department of Insurance that if you like, for instance, if you if you go over 65% because of appreciation, you don't have to automatically rebalance.
I think that's correct from a strictly statutory standpoint. And really what the goal is, and this is again through direction of the Department of Insurance, we want to be compliant as of the date of the end of the fiscal year, so that within the review by the Department of Insurance of our annual statement, we're in compliance at that point. So you're right, Tom, we're not in a position that we have to sell from a statutory standpoint. It would just be more of a discretionary fiduciary determination of whether to rebalance at any other time.
Right.
So what I'm suggesting, and again, I only play a lawyer on TV. But we should have a line here saying that from time to time we may, be, because of market moves above the 60. Because what it says here to me says we go up to the maximum 65%. we don't say anything about rebalancing at year end. We say we go to the maximum. So could we, or should we put a line in here saying there may be, points in time because of market moves or, whatever, that we may be above the 65% or below the whatever? Just a question. Or do we not care?
And just to kind of, yes and no. My yes is, in other words, this is, I put this in here to be for clarification for investment managers or new trustees, for investment consultants. If you ever got rid of me and you hired somebody else, that would be kind of they could pick it up and get an understanding of what they're supposed to do. The more legal stuff you get into investment policy, the more you have to adhere to it. And but you could simply state that that you rebalance it at year end to be under 65%, or some language we could get at. Now we could you could add a language about how you would rebalance, and but I like the idea of keeping it. Without putting you guys in constraint, because what if you don't? Or what if you go in at year end and you're at 65.6% because the market moved the last day, and so I don't know. I mean, it's
that situation that Tom is talking about did happen to us. We tried to rebalance, and the market just kept moving on us, and we did slightly higher.
It was 2019, I think it was. Yeah. So I get, and your point's well taken. Maybe it's a statement someplace else that we'll look to rebalance a portfolio. Well, then rebalance what? I mean, rebalance to the target, or just rebalance to be under 65% by year end. But again, that's all of a sudden you could get, like I just said, you could be over the last day, and then now you're kind of painting yourself in a box. But that's.
So Tom, if we look at the page before this, that starts all of this, I think that's the language that you are talking about, which is all of this is meant to be as a guideline, right?
Yeah.
So percentage allocations are intended to serve as guidelines. So Dave Farina, does that we started this whole section with that sort of language?
Yeah, I guess that serves the purposes. I mean, what I was trying to do was keep us out of the box of, you're consistently, we have had long periods of time where we've sat at 66, 67, 68%.
Now, and
that's fine.
Yeah. Okay.
As long as that's okay within the guideline, I'm okay with it. I mean, we always fix it by year end. I just wanted to make sure that the guideline says that we can be above that for periods of time because of market. And that's all I was asking. And I think if you call it a parameter and Carol and our attorneys are okay with us, then I'm okay with it.
So I think the second sentence does that. Because it says the net asset value is based on the last annual report. So for this year, our last annual report was January?
Well, it's as of December.
December of 2019?
Yes.
And we were balanced, right?
Yes.
So we could go unbalanced through 2020, and we just got to get balanced by December of 2020.
Yes. That's my understanding. And I see Carolyn shaking her head, yes. Yep.
Yeah, that's correct. I mean, the idea of that restriction, as the Department of Insurance has interpreted it, is that you just can't buy anything more if through some investment gain that you've gone beyond the 65% equity, you're not going to be forced to sell it. And you just have to rebalance it at the end of your fiscal year.
Okay, I'm fine then.
Hang on. I got a question for you, Carolyn, as long as you're here. One of the things that's come up in the past is that if you're over 65%, you don't have to rebalance because of appreciation, but if you were to make changes, then you might have to rebalance to that level. In other words, if we're going to get rid of Lazard and get rid of London, does that require us to rebalance to 65%? I guess I don't want to leave that. Don't want to leave that hanging because I just thought of that now.
No, you're right, because once you start making adjustments to asset allocation and who you're divesting from and hiring, maybe a different manager, you do have to be cognizant that if you're already at that 65% equity or over, now all of a sudden you're in that position where you're right, you're going to have to rebalance because you've wanted to buy more in equity, yet you've hit the ceiling or exceeded your ceiling.
Okay, so are we saying, let me ask the question this way, because Tom, you started this one now. So
I see. Now
yes,
for what I get.
If we know right now today, when we were making the decisions that we did, that we were already over the 65%, that as we were pulling out of one and moving money to another, that if we're over 65, we have to rebalance at that point and move.
That's right, because now if you are going to make more, let's say just for hypothetically, you're at 70% in equity and you've decided to make these moves. You do not have permission at this point to shuffle the deck around and make new investments such that you stay at 70% in equity. You're going to have to go back down to your 65% target, because as soon as you start making new investments, you can't make new investments that would take you past 65%. And that's a Department of Insurance interpretation.
And one more question, though, just so I guess that this comes into play, because this really kind of screws things up, doesn't it?
I'm trying to keep a sense of humor about this, Tom.
Well, okay. So the last thing I got to say is if you look at it, I guess, and this is one of the it's of your most current report to the Department of Insurance. So let's take, we have the same number. Anyways, okay. So we'd have to look at, I'm saying we have the same numbers, the dollar amount in the portfolio from last year. Isn't that what they're talking about, Carolyn? Your most current report would be from last year.
So where are you pulling that language out of a state statute?
Yes. I thought that was in the statute, Carolyn, that, well, it says right in our investment policy, most current report from the Department of Insurance, but hang on one second. Let me just take a look at something.
Hey, Tom, why don't we just make this easy on ourselves? Why don't we're going to have to rebalance at year end anyhow. So I know we had a plan to sell, I think, the Vanguard large cap and reallocate down to,
North Shore.
No, I thought we were going to go, we're going to go to North Shore. I thought we were going to go to one of our bond managers.
Dave, we had said in the minutes that we were going to move it to North Shore, and then when we met in January, we'd make a decision if we needed to move it. Because what we did at the last meeting is we took the money out of the Vanguard money market that we had sitting to take care of the fluctuations in the market. That we moved to Weaver already.
Oh, we did the Weaver thing. Okay.
Yes.
So why don't we just do this, just to make short circuit this conversation, because I have to be somewhere in a few minutes. Why don't we just make a motion to just take us down to 65 or 64.99 or whatever it is, and by selling the Vanguard large cap and moving it to the money market, and then we don't have to worry about it, because we can't be that far over anyhow. And we're gonna have to do it at year end. This is from, oh, there we go.
So this was something that Tom had sent over for us to take a look at it.
Well, and yes, and so I would, it says November 12th, I was doing it more so to give you an idea of where the market has moved recently. And I would suggest that you look at the October report if we were to rebalance to that level. and then still look at December 15th as the next look. In other words, because it can change. It could be here, the Lord giveth, the Lord taketh. How do you like that, Melinda, for quoting the Bible?
But Dave, is your idea to just have that motion in there and then a separate motion about adopting or not adopting investment policy?
So, given that we're going to do the Lazard move and the small cap move, by spirit of the statute, we'd have to rebalance down to 65. That's what we believe to be, and how we do that. So, given we're going to have to rebalance anyhow, and the market's been running a little bit, all I'm suggesting is let's just take the 2%, whatever it is, out of the large cap, move it to cash, and you just do it now, and that way we're in compliance if we make that move for the other funds. Is all I'm saying.
Yeah. Okay.
What's the other half of London's going to the Vanguard? Which one?
Small cap index fund.
It's going to another index fund, small cap.
Right.
This is Dave Grajewski. Since we have not approved the adoption of this investment policy yet we've already done the motion, is that something we can just wait to rebalance in December?
Yeah, all we've done is move this off the table. We've done nothing with this policy.
My thought is if we're going to give Melinda and Tom discretion in December to make that rebalance anyway, but why not just let it run until then?
And table the board or table the investment policy till our next regular meeting.
Well, then don't we run afoul of the insurance regulations then?
Based on what we were just told, yeah.
And I was just finding where the statute does talk about it's in 1-113 4A. It's the piece about the additional permitted investments of 10 million or more, and it says effective July 1st, 2012. You can be at 55% of the market value of the pension fund's net present assets stated in its most recent annual report on file with the Department of Insurance, which is kind of odd, which, again, has you looking back as the size of the fund as of December 31st, 2019. But I'm not sure that that's really what it implies. I think in any situation, you're looking at the size of your assets and you should not exceed 65%, because remember, it's 55% stated by statute. As Tom explained earlier, the interpretation by the Department of Insurance is you have that additional 10% authority in that separate section.
So, okay, talking about intent, the decisions that were made earlier today the intent of it was not to exceed the 65%. The intent of it was to recognize that we have managers in place that are underperforming, and so we're putting them in a better place. So we're not trying to purposefully exceed the 65%. So in terms of intent, that wasn't the intent of either of the boards today. So with that being the case, should that suffice for right now? Because we already know we are taking action to get ourselves back into compliance by the end of this year.
I think that's a fair way to look at it, Melinda.
Okay, so how about we look at it that way and we keep moving forward? Because I know I've got limited time with individuals and we have a lot since we know that was truly our intent. Is everyone okay with that?
Yes.
Yeah.
I'm good with that.
Okay.
All right, then Melinda, do you suggest we make a motion to adopt the investment policy for both boards?
If fire is okay with it, because we didn't, I think, and I apologize, Chris, I think there might be one other item on here or two that Tom needs to probably let us know about. I know there's little cleanup language, but I think on page 9 there was some other changes that were being made. Tom, can you speak to it quickly? Or not quickly, but effectively? efficiently. If you look at page 141 of the packet, Tom. Is Tom still with us?
I'm sorry, I'm with you. I had you on mute, excuse me.
Oh, that's okay.
So,
page 141 of the packet.
yeah, I'm looking at it now, and okay, so those we got rid of language about the reports you have to give to the village. It doesn't pertain to the investment policy. It was in there, the amount, like for instance, the estimated receipts from the next succeeding fiscal year from deductions, the funded ratio of the fund. That's not part of the investment policy. It doesn't seem relevant to what is, this is investment policy. This language is more of an operational that, the fund needs to provide to the village board. So I took that out.
Yeah, that looks like that's the language regarding the municipal compliance report. And I concur, it's not investment policy topic at all.
Okay. Right, so that's a good cleanup.
Okay, thank you.
Anything else, Tom?
That's it for me. Melinda, is there anything else that I'm missing here that needs to be addressed? I think
the only one, Tom, this one, it's on page 144. Oh, that's the EFTs, I think, that you added there. There was
down at the bottom.
Yeah.
Yeah, we added that the board considers exchange traded funds permissible.
And then on the next page, Tom, there is restrictions.
Right. So we added purchase of American Depository receipts for if you had an individually, like London company, or if you had individually managed portfolio, some of those managers would buy what they call American Depository receipts, which are essentially they're receipts of foreign corporations, and there's liquidity, and they're traded on the New York Stock Exchange. They're actually that's what most people buy. But again, those esteemed lawmakers downstate came up with this idea that you can't buy these, and because they're not actually common stock. They're not actually common stock securities. So it's you'd get
Okay, didn't mean to interrupt. I was just going to ask: is that clear that the restriction is against our purchasing these directly, or do we need to add language that says we cannot directly purchase these, but may do so through a mutual fund, or we may own a mutual fund? We may own a mutual fund which purchase ADRs.
That's been discussed other places, and I don't find that necessary. It's not,
okay.
I mean, yeah, and we've, again, maybe Carolyn can chime in. We've talked to the Department of Insurance, and we've had discussions. The qualifications for owning a mutual fund doesn't exclude owning American Depository receipts in the mutual fund. In fact, there's probably other non-permissible securities in mutual funds, but there's different qualifications for that. So
okay.
Okay, and then Tom, I think that's it for the majority of changes that were made. And then we know that what we're looking at here is changes proposed to the police investment policy. So I think if fire is going to agree to these as well, then we're going to give instructions to Tom to make the changes to the fire one as well to mirror what we see in the police one. And then Tom, if you can make the signature page a separate page, because it looks like
sure.
All of us need to sign it. So in order to help facilitate that signature, instead of having it split between the two pages, if you can help me out with that.
Mm-hmm. Will do.
Right, then I think then each of the funds will need to take action on this. If there's no other questions.
Okay, are there any other questions on fire? Hearing none, any other questions on police? Hearing none, motion on fire?
Motion, Bogardrewski. To adopt.
Seconded by Melinda.
Jason, please call roll to adopt the investment policy for the fire department pension fund.
Mr. Canning,
Aye.
Mr. Grzewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, so that carries on fire, please.
Can we get a motion to approve the new investment policy, please?
Motion, Kinzel?
Second, please.
Second, Paulson.
Okay, Farina's an aye.
Kinzel, aye.
Collins, aye.
Paulson's aye.
Okay, motion passes.
Okay, next item on the agenda is if we go to, sorry, where did I write that down?
It's on page 148 if we're going to go through the rules, or because of what's happening with Dave Farina and his time.
And that's
Chris,
what I was going to ask.
do we want to move down?
Feel free to bypass my item. I'm working on other things, so don't mind me.
I got about 15 minutes.
Why don't we leave, I'm going to suggest we leave item E on the table, and in interest of Dave's time, why don't we advance item F regarding the legal service agreement? Do you want to? I'll advance it, Dave, if you want to take it from there.
It's on page 224.
This is Tom McShane. I have a 4 o'clock meeting. Can I be excused?
Yep, Tom, I think we've got everything we need from you. Thank you for your help today.
And then
You're welcome. Thank you very much.
really quick, Tom, you're going to send the corrected investment policies to us so we can get the signatures done.
Right. Yeah. And I'll call you tomorrow, Melinda, just to kind of make sure I'm all in task with what we're doing.
Great. Thank you. Oh,
Thank you. Thank you. Okay. Bye-bye.
Just to remind you, Melinda, you'll have to file that close with the department insurance too.
you know. Okay. Thanks.
All right, Tom is gone. We're advancing item F. Dave, take it over.
Sure. This is just the legal services agreement. I guess the termination part for all the work that Reamer did for us. Is that right, Pat?
Yes.
Okay, so I just need a motion to approve this agreement as depicted on 224. Is that right, Melinda?
Yeah, it's on 224 and 225.
Okay, can we get a motion to approve the agreement on 224 and 225, please?
Motion, Kinzel?
Second.
Collins.
Okay, all in favor, aye. Farina's an aye.
Aye, Kinzel.
Aye, Collins.
Paulson, aye.
John, you're an aye?
Yes.
Motion passes.
Okay, why don't we also do this? Why don't we advance item G? Because Pat, I think you wanted to give an update on consolidation. And Carolyn, if you want to jump in on that, if you have any information. And then if we're done with G, I don't think there's anything left for police, Dave, so I would suggest police adjourns, unless they want to listen to the board rule discussion, but you guys would be free to go because I don't think you're adopting the same rules.
Okay, that's fine with me. So we do want to get the update first.
So why don't we advance G? And Pat, why don't you start with that?
Okay. So for the consolidation, I know there were some questions we were getting. We got the ballots for what they call the participant members. There's the 6 candidates, but the beneficiaries didn't get a ballot. So finally, I was able to talk to a lady from Foster & Foster who's managing this election, and she related that there was there was only 2 nominees for the beneficiary on the police side. That the 2 nominees were on the transition board. They were appointed by the governor. No other beneficiary put in a nomination, so that's why they do not have an election. And then the election should be done, I think it's in December. And as far as do you want to go into the that lawsuit.
Yeah, keep going.
All right, so with the lawsuit, it looks like they got a couple more firms. They are probably over their allotment of, or their goal of 10. I was talking to a guy today from IPPFA. He said that 2 other firms just joined.
You mean funds, Pat?
Funds, yes, funds, sorry. 2 other funds joined, but they still haven't filed a lawsuit action on it that he knows of. We've done a poll, and right now I have 29 of our beneficiaries / active members that have replied, and the majority say right now 18 are saying do not join the law. There was 3 questions. The first question was, should we consider the Wilmette Police Board pension board consider challenging the constitutionality? There was right now it's 17-12 with a yes, 17-12 yes, 12 no. Whether we should join this firm, Koenig, it's 10 yes, 18 no. And then whether we should look at possibly finding another firm, it's 9 yes, 19 no.
Pat, can you repeat that, the first part? So
Yeah.
it was yes, they want to challenge, or no, they don't?
Yes,
What was-
yes, there were, right now it's the 17 are saying yes, they would like us to look at possibly challenging the Public Act. But yeah, it's kind of weird. They don't want us to join the one firm and they don't want us to go to an outside firm yet.
Well, they want us to look into it.
Yes.
Okay. I'm not sure how I read that, but all right.
All right, Pat, anything else on consolidation?
No.
Carolyn, you want to give an update on fire consolidation?
Sure. So fire consolidation keeps moving along pretty quickly. They also have been in the midst of their election processes. For the fire fund, there was no contested election on the active side, so the only candidates will be elected by acclamation. There was a contested election for the retired spot, and those ballots have been sent out and are due by December 1st. There's also contested elections for the municipal representatives to the board, so those ballots have gone out to the municipalities, and the same thing, they're to be returned by December 1st. The fire board has also put out both of its training webinars. Each of them are 2 hours. Both webinars together fulfill the 4-hour training on consolidation that you're required to take as board members. Those are free of charge and they're available on their website to view at your leisure. You will get an email confirming that you did view those webinars, and you'll want to maintain those certificates in your training files. And then finally, on the fire consolidated side, they did interview a couple weeks ago the 4 final candidates for investment consultant for the new consolidated fund. Those interviews were conducted, but a final decision as to which candidate will be selected has not been made yet. From what I understand, one of the candidates is Marquette Associates, which is a Chicago-based firm. The other 3 are from out of state. And so that's where they are at their process.
Okay, thank you, Carolyn.
If I could chime in really quick, just to clarify something for us. We were, my staff was contacted by the consolidation group. There looked to be an issue with our retirees and them not having the complete address for them. So we have sent that to them on Friday. They're getting those ballots out. So if the retirees didn't receive them, we have had a double check now and now know that they have correct addresses to get a hold of folks.
Very good. And then you may want to do a little spot check to make sure they do actually receive those ballots. And I know they can ask for replacement ballots if they don't receive them in the next week or so.
Yep. So
okay, anything else on consolidation, either police or fire?
And I'm sorry, Chris, I just wanted to clarify, the actives should not be receiving ballots because it was an uncontested election, correct? Thanks. All right.
Okay, hearing nothing else on consolidation, then Dave Farina. I believe you're done on the police side, so if you guys want to adjourn and
Can we make a motion to,
Oh,
I'm sorry.
Dave. Chris, do we need to do the training thing or we're not doing trainings?
yeah, why don't police, why don't you handle training, and then we're gonna be a little bit longer.
you want to call it, this meeting's gone 2 hours and then you have, what, 2 hours for the packet? Hour and a half? I don't know. 4 hours sound good, guys?
Sounds good to me.
Yes.
Okay, so be it. Okay, can we get a motion to adjourn the special meeting, pension board meeting of November 16th, 2020?
We got a motion on that training, I believe.
Oh, do we need a motion for that?
Yeah, we did last
On
time.
training, yeah.
Okay, sorry, my bad. Before we adjourn, first, a motion to approve 4 hours of training for the Wilmette Police Pension, Special Pension Meeting.
Collins,
Second,
Second.
Kinzel.
Yeah. All in favor, Farina, aye.
Kinzel, aye.
Collins, aye.
Paulson, aye.
Okay, motion carries. Can we get a motion to adjourn the meeting, please?
Motion, Kinzel.
John will second.
Okay, Farina's an aye.
Kinzel, aye.
Collins, aye.
Paulson's aye.
Kinzel, Sokolnik.
Yeah,
Okay.
Kinzel said aye already.
All right.
John seconded.
The meeting's, we got it all set. Meeting's adjourned. Thank you.
Okay, aye.
Thank you.
Okay, police is adjourned. You're more than welcome to stay with us.
right, we'll
We
see
will
you
now
guys.
See you, Dave.
Hi, David.
Next item is fire board rules, item 10D. We need a motion removed from the table made by Mark, seconded by Melinda. Jason, call roll, please.
Mr. Canning,
Aye.
Mr. Grajewski,
Aye.
Miss Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, I think we're at page 148 of the packet. We have a memorandum from Carolyn, cover memorandum with respect to the fund rules. You've had an opportunity to review them. Carolyn is here. Carolyn, the floor is yours.
Well, thank you. And board members, thanks for having me here today. And also thank you for being patient with this process of doing a complete overhaul of your board rules. Last summer, I started this process with an eye to prepare board rules that were easier to use, as well as easier to update going forward. In the past, it's been my, I guess, way of doing things that I would gather probably 2 or 3 years worth of updates that needed to be made to board rules, and then try to get caught up every 3 or 4 years with these updates. And it was an imperfect process, and I decided to take a page out of the Illinois Association of School Boards playbook, which is in their policies that they provide for the vast majority of the school districts across the state. They go to this I guess, model where they have one policy per page. They provide legal references as well as any implementing regulations and or forms. And I liked that way of doing them. So that's why these have been completely revamped with kind of that format in mind. So last year you would have received a first draft of these. Then in the last year, I've spent some time with a lot of different boards talking about changes they wanted to see, feedback that they had for me on these revamped board rules. And then I guess kind of surprisingly, 2020 brought us a lot of additional changes to our board rules that I needed to update as well. So this summary memo that you have in front of you now gives you the additional changes that I've made to the initial set you would have seen in 2019. And these are the changes now for this final set. So I'll leave it to you, but I can walk through the memo and I can tell you the most recent changes. And then if you want to work through any more of the other components of the board rules, we can do that thereafter. So let's start with chapter 1. Chapter 1 is really Board of Trustee rules. You'll see that I've made some changes in terms of section 102, which is the election of board members. The idea with this change here is I've added the word only to section 102 to make it crystal clear that we are emphasizing that we want to receive self-nominations of individuals who seek to be candidates for the elected positions, with the notion that we really don't want to entertain nominees from people putting other people's names in that may not be interested in serving on these boards. So that was one of the changes. And then the other change in this section in 1.02 is I've tried to set a date that board members will take office, because the statute surprisingly is silent on that question. And this is back in 1.02. So for your draft set, I've got in the draft policy that your elected officials or elected trustees will take their seats on May 1st. Now, knowing that you typically meet in May, that would mean that your newly elected individual would begin their term at your May meeting. And this is your discretion. Either we can stick with that, or if you want to make it June 1st or July 1st to align with the third quarter, that's completely up to you. But again, the statute's silent on that. And I like the idea of putting a date on it. Ironically, the police have a date by state statute. You don't. Just so we know crystal clear who's sitting on the board, should we have a matter of importance as to who's going to be holding the seat to act upon any particular issue that may come up.
So I think to your point, Carolyn, you're just codifying what our practice is. So
yeah, so
I think that works for us, because unless somebody else wants to chime in, that is kind of how we have functioned. Chris, do you see any issue with that?
I agree. No, okay. I agree. That makes sense.
Okay. Section 105 is where the next big change is, and this is.
But can I stop you, Carolyn? And I know we're going through the memo, but I think one of the other things that would be helpful for the board is 103 is actually something that has started to come up in terms of a discussion. Would you just spend a little bit of time, because these are not necessarily positions that we have delineated before in the past. So can you take some time and walk through 1.03, please?
Oh, sure. So these are not only your board officers, but other designees and potentially committees that you may or may not avail yourselves going forward. So by the state statute, by the Illinois Pension Code, you are required to have a president, a secretary, and then your treasurer runs with the office. So Melinda is your treasurer because the state statute says that the village's treasurer shall be your treasurer. So those are your three officers by statute. Just to contrast that with the police literally have 4 officers: president, vice president, secretary, assistant secretary. You don't have any of that. Yours are president, secretary, and treasurer. Then I also added to this section the Department of Insurance Security Administrator. And I think for your board, that is Melinda. And that's a designation you would have made at the direction of the Department of Insurance. And it really is the gatekeeper for your financial information that is housed on the Illinois Department of Insurance website. So Melinda then is the person responsible to give permission to who work on that site to upload information about your fund, the financial information, and particularly the preparation of that Department of Insurance annual statement that's done annually. And then that may come up from time to time that you have to give permission to maybe an actuary or some outside accounting firm, but that's what that role is. Then we've got those other state provisional designees, one being the open meetings.
So Carolyn, so let me ask you a question. I agree with just how you explained that one. So really for us in here, does the board need to take action to do it, or can we just have it in here that it's going to be the treasurer? Because that's how the Department of Insurance sort of treats it.
Well, that's kind of interesting because they actually have a form that you're supposed to fill out.
I did. So
yeah.
I didn't get to do that before. I think initially a long time ago when I first started in this position.
Right. And we could certainly say that it will always be the treasurer, and that would be completely fine.
Yeah. Can we do that?
Absolutely. So I will add that language in. And what I'll do is when I do update these, I can signal them for you so you'll know what the changes are and to make sure I got them just as you wanted them. Then the next two are really, statutory creatures, one being the Open Meetings Act designee and one being the Freedom of Information Act officer. Again, appointments that are required by state law, these living under those two laws. There's no requirement who these individuals are. I don't even know who your board has designated for these positions.
So at our last board meeting, we just took action on this. And what we want to do going forward is it's going to be the secretary.
Okay. And that makes sense. So what'll happen for that individual is your board secretary, who I'm not even sure who your board secretary is now. Is it Jason?
It's
No,
Dave.
it's Mr.
Jason.
Krajewski. No, Mr. Krajewski.
It's Dave Krajewski, yeah.
Oh, okay,
Yeah.
it's Dave. Okay. The thing that you'll have to do, Dave, is actually go on the AG's website and take those trainings as the designated person for the fund in those roles, and then you are obligated to take that training annually. And I don't know if they will signal to you each year that it's time for you to take your training, or if you'll just have to remember to annually engage in those trainings.
So just so you know, Carolyn, the practice here at the village is that we like all of the trustees to do the training, and I remind them at our October meeting. So,
Okay.
so that's something that all of us end up doing,
Okay,
just
wonderful.
so that we're all kind of have some awareness of it.
Yeah, that's not a bad idea. And plus it counts towards your other training requirements, which is now 8 hours. So that works as well. And then the last individual that I noted in here, well, it's not an individual, it's a committee, and it's just a may appoint. So it's just an option for the board president to assign a group of people from the board if you wanted to have them look at specific issues. Just kind of loosely, they're provided as an as-needed basis.
Okay. So the president can appoint, the board doesn't need to vote on that then, correct?
Correct.
Okay. Right, great. I
All
don't
right.
have any more questions on that section.
Okay. The next place that I had a significant change, as I noted in the memo, is in section 107, and this is in your rules of order. So again, we've done some changes. First on rule 3 of voting. I guess sometimes it was confusing to understand the difference between a voice vote and a roll call vote. And I used to describe a roll call vote as an aye and nay vote. So I've removed that. So now we're crystal clear on saying when we want a roll call vote to occur. And essentially it is as it was before, which is on resolutions, propositions creating liability against the fund, essentially financial issues. And if there was anything, a big decision like granting or denying a disability pension, or anything that also had the request of a member that you roll call it. Otherwise, voice votes are fine on other matters. Of course, that puts aside for a moment what we have to do on a remote meeting, and that I address at a different spot. But just be aware of that little change. When you get to Rule 8, which is the recording of minute or open meetings. The change that we now live under Section 7E for remote meetings has been added, which is that you do have to record your open session meetings when you're operating remotely.
Okay, can you do me a favor? Before can we go back to 7?
Sure.
I think we're going to want to change this unless we, so let's go to Section A, Rule 1, the agenda. Or let me phrase it this way. So you see kind of how our agenda looks right now.
Right.
Do we have to do our agenda this way? Or
No.
as long as we're hitting sort of?
We can do it just as you want to do it. So the one that's in there is just an example, and I can change it to look just like the one that you have for this meeting. If that is kind of your template agenda, that's completely fine.
Yeah. So if our template works, I think that's what we'd probably want to put in here, because Unless, does anyone have any thoughts about that?
No, I would agree.
Okay. I'll make that change too.
And then the next area is, can you just flesh out for me really quick when something would need to be on a resolution?
So it's usually a decision where we want to document that the action was taken in a more elaborate way than just a reflection in the minutes. So for example, eventually when you adopt these board rules, I'll want you to do it by resolution. Now, a board like yours does not have an ordinance making authority, so we never adopt ordinances. But
Okay.
resolutions will do things like directing signatory authority is another good example. Sometimes we do them to honor people or thank people for their service to the board. Other than that, resolutions don't come up very often.
Okay. And then on item F, the middle portion there, that is not something that our board does right now. So does the board want to change what we do right now, that second paragraph?
Are you looking at in Rule 6 addressing the board?
Yes, sorry.
Okay.
Yep. Rule 6, item F. And by what we don't do right now, we're not requiring people to sign in or to do something. So as I'm stuttering here, what I'm trying to do is get us to capture our practice.
You're saying just strike the second sentence.
I think so, Chris, don't you?
Yeah. Yep, that can come out. And I will also make sure that I don't reference a form that you're not using either, which is the public sign-in form. I'll take that off as well.
Right, we don't have that.
Okay. Otherwise, are you comfortable with the rest of it in terms of that paragraph that, you have to be designated authorized to speak by the president and limit your statement to 3 minutes?
Yes.
Okay.
Yeah, I think so, right? Okay.
Sounds good. All right.
And then the next thing I think was going to be, at least for me, I was gonna, well, I tell you what, how about you tell us if you want to tell us something more about Rule 8, then I have a question about Rule 9.
Yeah, I think I probably said everything I was going to say about it, which is, just to remind you that you do have to record these open sessions when they're remote. And I'm recommending, and if I haven't sent it to you already, I'll send it to you. I think we should start tracking these recordings of open sessions. Right now we don't know what the state law is. Well, let's put it this way. The state law is silent on how long we're going to have to keep these open session recordings of remote meetings. Given that there's so many governments conducting remote meetings, I suspect we will get something definitive from the state archivist as to what the rules will be about destroying these open session recordings. And if we've kept some kind of spreadsheet or list of what recordings we have, it's going to be a lot easier to take board action to destroy them once we understand what the law is going to be or the direction of the state archivist is. I mean, it might just get enveloped into those other destruction of record schedules that you have to produce, but it's going to be my recommendation that as soon as we understand when we can destroy them, that we do take action to destroy them.
Okay.
And so that's all I had on the recordings of open meetings.
With rule number 9, I think my question becomes in the sentence that over here where it says, and will be acknowledged in the minutes as having been received. So I think maybe this is just something for the secretary on the boards. I don't know that we actually, right now, it will be part of the packet of material that we have. And I think this is, Carolyn, something that we talked about before, and maybe I needed to address this with the agenda, but how our minutes are done. So if we are getting something, if there's a request from, I'm just going to say a member for whatever reason, there needs to be an item in there saying that we received this letter.
So I wouldn't say it's a must do, but I think this is a nice way of conducting the business. But if you feel uncomfortable that we're kind of tripping ourselves up about acknowledgement in the minutes, we could certainly strike that piece of it or modify it as you see fit. Because you're right, there may be communications that are almost more like junk communications that maybe we don't need to elevate to this notion that we have to acknowledge all this stuff that's come into us.
Okay. I prefer if we take that out so we don't trip
Right.
ourselves up on something, if the rest of the group is okay with that.
No, I'm,
And do you want to take the full sentence out, beginning with such communications shall be brought, or do you want to just take out the will be acknowledged part?
I think we can take the whole sentence out because it's
Okay.
already saying that we're going to submit it to the board, and that's something I'm going to say that we're pretty good about doing.
Okay, that sounds good.
no, I would agree.
Okay, sounds good. Okay.
And maybe before, let's keep going because I'll bring that up at a separate time.
Okay.
So I didn't have anything on 1.08 unless somebody else did.
And just for your background, in case I've never shared this with you, 1.08, this board member ethics policy started as a school board policy that I just modified to make it more punching friendly. So that's where these notions of ethics came from.
But the main issue is we've got to file our statement of economic interest, which I think we've all been doing.
True.
Yes.
True.
Do we want to have the date in there because it's really initiated by Cook County? So do we just want to say at whatever, because they could change the date on us?
Well, it is by statute May 1st right now.
Okay.
So
Right.
it's state statutes. I don't think the counties
Gotcha.
necessarily modify that. Yeah,
Right.
but it certainly comes out a lot earlier than May 1st.
Yep.
All right. I didn't have any additional comments until I get to 110. So was there anything on 109 that you wanted to look at?
I didn't have anything on 109.
Okay. So when we get to 110, this is all the consolidation, all the training you're required to do. It now reflects that the initial training is 16 hours, and I did modify the topics because the state law has now modified some of those topics so that you don't have the training on, for example, actuarial issues anymore. I did also modify the annual training down to the 8 hours. And I made a point of not bothering to add the kind of one-off 4-hour training, the consolidation training, because it's just not going to come up again. It'll probably be enveloped into, anything about consolidated board will just be part of the 8-hour training going forward hereafter. And other than that, I really didn't make any changes to the concepts that were in this training policy previously.
And there's nothing in here that requires the training to be done by a college or university that was suggested in that letter.
Just the 16 hours, that one says it has to be, but the rest of it is not.
Correct. Correct. Yeah. And I'm trying to remember, have you gotten back your final DOI audit yet or not
No,
yet?
we've got to approve the letter today and send it out.
Very good.
Which I'm going to have a question about that. But let me ask you something really quick that I heard from the training that I sat in on Friday in regards to this consolidation. And it only goes to the point that you brought up about the actuary. There was discussion going back and forth about funds on their own still doing an actuary report. And there were some questions that they had in the end. I can kind of see you smiling about how things were going to be handled. I believe it's the village's intent to still have actuary calculations done because we want to fund our system in what we believe is a more actuarial sound way. So we have, the village board has adopted a policy to do it on a 15-year rolling amortization. What wasn't clear to me is and I know we're talking about training here, but it seemed to me that there was some disconnect between who was doing the actuary report. They definitely weren't giving it to the fund anymore, but whether or not there was going to be this ability to handle things slightly different from how maybe the consolidated group was going to put things together. Can you just speak to that really quick?
Yeah, and and this is probably why I've been more worried about the new consolidated board taking over the actuarial piece more so than the investment piece. Because from the investment piece standpoint, I think that things are going to be just fine, and that's going to go well. And I have all but just high hopes that that's going to go well. This actuarial piece, though, really bothers me. And I think part of the muddle, Melinda, is the fact that when the task force put together its recommendations for what consolidation law should look like, they could not come to a consensus on changes on funding, other than there was a consensus that was expressed in that task force report that front-loading contributions, everyone agreed, was the way to properly fund a pension system. Now, so we had no changes on any of the provisions that dictate how pension funds are to be funded, no changes in statutory minimum, no changes as to which actuarial report could be relied upon, no changes to intercept laws. I mean, that all has stayed status quo. So that really raises the question, and we may not have an answer for a while, is what's going to happen when the consolidated law provides that the transition or the consolidated board will take over the responsibility for the actuarial valuations after the transition period has ended. So once the transition occurs, presumably in 2022, the consolidated board will then take over this actuarial responsibility and hire an actuary and make the determinations about the assumptions that are going to be used. And so I'm hearing some of the same kind of noise that you're hearing, which is speculation that the consolidated board's just going to stick with statutory minimum, and that's how these pieces are going to be produced. But then that raises the question of, I mean, are they going to produce GASB disclosures, because statutory minimum is not compatible with GASB reporting, and I guess for me, I don't even want to start speculating about any of that, because I really still believe there's going to be some statutory changes on funding that may occur prior to the new consolidated board taking over that responsibility. But as we sit here at this moment, I think you're right, Melinda. I think a lot of localities, both from the pension board side and the municipal side, are thinking, you know, we're really happy in how we've approached our funding policy. And if it's just going to be statutory minimums reports, you know, given to us from this consolidated board, we're going to stick with our outside actuary and continue to fund as we have in the past.
Because there seemed to be that whole, you know, IDOI does theirs right now. Then with this consolidated board, they're right. They have the RFP out there, or at least they're going to at some point in time to have an actuary. And then I just know, and there were several questions that were brought up during this, that at least from our perspective, as I've already said, we continue with the thought we're going to hire our own actuary because we want to stay on the path that we are with what we think is a more sound way to fund the pension system. So some of this tied into what you were just talking about right now, but it just also jogged my memory. So I just wanted the other trustees to sort of hear that and know about that.
Yeah, and you're right. If we're going to remove from the initial training understanding of actuarial principles, I don't think the intention was that at the local level we'd be doing actuarial work anymore. Right. But if they're not going to straighten out how, with some forethought to proper funding, right, coming out of a consolidated board, then we've got a bit of a mess on our hands. And yes, and I'm kind of disappointed about that. And I know those are really hard decisions to make going forward, but I still think that they may come to a path to find some way of changing some of the funding approach in such that the report that comes out of the consolidated fund may end up being the report, but it's going to have to be an appropriate report. It can't be something that minimalizes funding, because that's just a disaster. And you know, and just also just kind of along that same note, if our thought process is consolidation is saving all these funds money, and they're all still having to spend a few $1,000s on actuarial studies, we've kind of missed an opportunity to have some cost savings at the local level. And I think that's kind of disappointing as well.
So it was definitely out of that meeting where they said they still need to sort through this and figure it out and what have you. But okay, so that's enough for me on that topic. Thanks, Carolyn.
You're welcome. All right. So the next thing I like goes into chapter 2, which is when we get to the section on membership in the fund. And you got to flip through all that Freedom of Information Act policies first.
Do you know what? As you're scrolling over there, can I stop you though? Can we look at section 1.12?
Sure.
And fellow trustees, I think we want to talk about this last sentence here, especially Dave Grajewski, about the inventory that needs to happen. So this sentence that I'm trying to highlight here, the inventory should include the classification of records as well as the dates. the volume of the physical records in cubic feet, annual accumulation, and all right, so I think this is one of these topics that we need to talk about whether or not we could comply with something like that, and whether or not that's a must.
So this is a must, and this is an interesting area where in the past I've never had a board rule on this, but this has become one of those topics that I think have not only caught the Department of Insurance's eye, but I think even the state archivist has realized that maybe this has been an area that's not been well done in the past.
Mm-hmm.
And it, and certainly we're running out of space to hold things physically, and so much more of our things now are, of course, are electronic. That's why a lot of funds are looking at this issue now. So I fleshed out really a policy that is following just basically what the state law provides, and it's up to you how you want to implement it locally. Sometimes pension funds will partner with their village to work on this project together and to make sure that these schedules are put together and that that you're complying with all the requirements before you destroy records. Because it's important to always remember that it is a felony to destroy public records without permission. So you want to be very thoughtful before you start cleaning out filing cabinets and don't think through what your obligations are by state law.
So I think that is that's a good comment. One of the other things, unless I just missed it in here, is it helping us understand the difference between physical paper records and electronic records, and when an electronic record can supersede the paper record?
Right, because if you have things electronically stored and they are the type of electronic document that passes the requirements of the state archivist, it has to be a form that is still going to be able to be dealt with in the future. Like we're not going to, go back or 8-track tapes. It just, as long as you're storing it in a way that you can still retrieve it, then you will be looking at making choices going forward, as far as maybe you've printed it out on paper, you had a paper and electronic version sent to you. If you designate your copy that you're keeping as a public record as your electronic one, you don't have to feel obliged to hold on to all the paper duplicates that got passed out to all the board members, or feel like you have to scan in those documents because you've already received the electronic copy. So certainly duplicates are in their own world, separate. So and really the state archivists, they're really good about sending out somebody to help you through these processes if you need to kind of start making some choices about going electronic and destroying the paper versions. So.
Okay, so what you're telling me is that's not one that we can strike out of this.
Correct.
Okay.
That's okay.
I tried.
I know.
All right.
All right. So then we get through Freedom of Information Act. Really, any changes I made to this were probably small, and they probably occurred in the first version that you saw last summer.
And I don't think I had any comments on this because I think it's pretty much
statutory.
Yeah.
Yeah, it is. Same with 114, the Identity and Personal Privacy Protection Acts. Again, completely statutory. And that last section, the 1.15, the Code of Conduct for Fund Service Providers, this was my kind of Illinois version of what NCPERS at the national level was asking pension funds to adopt and hold their service providers to. And basically, it's just goals of integrity and professionalism that you would typically expect of your fund providers. So that's what's
straightforward.
Yeah. Okay. So then that takes us to chapter 2, and I had a few things in chapter 2. So my first one is in section 203, but is there anything in 201 or 202? Yes. Okay.
So on this one, I'm just going to start with this. Is there, what, if any, is this all statutorily set, or do we have some ability to make some changes or comments here?
So we have some opportunity to make some modifications here.
Okay. So in this particular item, Dave Grajewski, by chance, are you on Teams? Can you see page 182 of the packet?
Yeah, I'm looking at it now.
Okay. I think this is an area that we want to take a look at. And some of the information, again, seems to be reasonable. I don't know if we're grabbing all of this right away. So I'm going to let Dave talk about that a little bit more. But I would like to talk a little bit more about this physician certificate.
Yes.
And whether or not the board should be holding on to this information. So I don't know how we want to parse this up, but I think that's an area that we need to talk about.
So let me give you some background on the physician's certificate of entry-level physical condition. So back prior to the Americans with Disabilities Act, the pension fund could make a decision to keep a firefighter out of the fund if upon a separate or even any physical examination that was conducted by the village or separately by the pension fund, there was determined that they had a higher risk to potentially become disabled. So the classic example was diabetes. If they were hired as a firefighter despite the diabetes, but the pension fund made the decision like, hey, this is going to be a problem for us. There's a chance that they may become disabled, and so they're riskier. We're just going to deny them entrance, and that was allowable until the Americans with Disabilities Act, which essentially said if they're good enough to be hired as a firefighter, they are entitled to all the same benefits and protections that anyone else being hired as a firefighter receives. So at that same time, there was changes in our state law that removed the pension fund's statutory option to conduct a separate physical medical exam of applicants to the fund. However, what didn't change is that the Section 4-110.1 that addresses occupational disease disability still can be a situation where if we have an applicant or a new member that comes to our pension fund with a concern, a medical concern that touches upon issues of heart disease, stroke, tuberculosis, or any disease of the lungs, respiratory tract, or cancer, if we are aware at the time of hiring that they suffer from that condition, they are not eligible to seek a occupational disease benefit on that same condition. The only time this has ever come up for me is actually high blood pressure. So if we had a firefighter that we hired with high blood pressure at the time of hire, albeit in check, such that they can perform the duties of a firefighter, but later on that blood pressure issue gets out of control and they can no longer work as a firefighter, so they seek an occupational disease disability benefit based on that high blood pressure, they would not be eligible to seek that occupational benefit. Now they could apply for line of duty, they could apply for non-duty, but occupational disease they could not. So this circles back to really a checklist of areas of medical concern that we want to be aware of at the time of hire as to whether they suffer from any of these conditions. They typically are the same list of conditions that you'll find on the OSHA forms for when we hire a new firefighter, particularly to wear SCBA. And so our occupational doctors should be checking these things anyway and making a formal checklist of whether there's any of these concerns that have come up on the entry level physical. So the contemplation for this certificate is that we have our Board of Fire and Police Commission use it in tandem with their processes to do the pre-hire physical. And then that form is completed. It's very simple. And it's either stored with the rest of the medical pre-hire records, or it can come back and be stored in our medical records. But it just needs to be documented somewhere. And I know because it addresses medical issues, it can be a bit of a sensitive document. And that's why if it's stored under seal with the other physical exam materials, we can always subpoena it if it would ever come up.
Okay. So, and I don't, if one of the other trustees wants to chime in, this does not come to us on the pension fund right now. It is held, it's a document, and it's a process that's done by the village in terms of the hiring. So this is a section that I don't know we should have in here because it's articulating something that we're not doing right now. It's not part of the pension board's process.
And so, yeah, it's certainly up to you. I would recommend that you keep it and then start working with the commission to say, hey, can you make sure your occupational doctor fills out this form too, and then just store it with your other pre-hire physical materials, and if we need it, we'll be able to subpoena it down the road. But if you feel strongly you don't want to bother with it, I'm not going to argue with you. I mean, again, I think some of this stuff is being checked from like an OSHA or SCBA wearing standpoint anyway.
Jason here. I just have a quick question on this. If we were to implement this in our policies, would we be required to make new applicants aware of this policy?
You don't necessarily have to make them aware of it. If you do any kind of, I guess, onboarding when you bring your individuals on as new members to the pension fund, this would probably be a topic to bring up with them and just say, hey, be aware, when you're going through your pre-hire, or when you went through your pre-hire physical, there were issues that were looked at for OSHA compliance, wearing your SCBA, that go to issues of, diseases of the lung, heart disease issues. And if any of those issues came up in your pre-hire physical, it is possible that you may never be eligible for an occupational disease benefit. However, like I noted, you could still file for line of duty or a non-duty if one of those conditions you came to the job with at the time of hire. So I think it might be something to address in the kind of the onboarding as a new member of the fund.
So more of an HR issue?
Yeah, so I imagine your HR individual helps deal with some of the pension paperwork. Yeah, it might be a hard thing for the HR person to necessarily articulate. I know sometimes some of my pension boards, if they sit down, with new recruits, particularly if you've got a group of them kind of coming on together, it's kind of nice to walk through the benefits with them. And these are the kind of things you could bring up in that kind of training if you would ever want to do something like that.
So Carolyn, can I ask this, and sorry, Jason, if I'm going to jump in, and maybe this is what you were going to get at, I could be wrong. Could it be part of the letter that they're signing off on when they're requesting to be a new member, that this is sort of on the letter so that they can see that this is the case? Because I'm going to get back to, we on the pension fund are not seeing their onboarding paperwork when it comes to these physicals. That's not happening. So right. Could we have it as a check thing on there that yes, they completed it, and that they understand if any of these items were identified, that it will preclude them in the future from getting an occupational duty disability if it's tied to one of those items. Is that possible?
Yeah.
Is that a way to address this? I'm just trying to think how we can I don't know other trustees on here. I don't know how we can comply with this right now, because we don't do this right now. Unless Dave.
Right. I mean, I'm looking at it, wondering how we could comply with it.
Right.
To Jason's point, it's either HR or Board of Fire and Police, but it's not Pension Board.
Right, and typically it's coordinated with the Board of Fire and Police Commission if you think they're amenable to helping us navigate this document being filled out and placed in our firefighters file. And again, doesn't have to necessarily come back and come to the pension file, but as long as it's in their personnel file that we could subpoena it. Who's doing your occupational pre-hire physicals right now? Is it, trying to think who's, Fragan? It's
Fragan.
Yeah, and Fragan's familiar with this form. He fills it out for other pension funds too.
So Dave or Jason, when you guys came on, is this something that you're recalling?
Yeah, Jason, I know I did. I had not only a physical, but I also was. They took X-rays for, I believe it was lungs and back. But I never saw those. I don't know where they went. So I don't even know where I would find those.
And I think most of the occupational doctors, and I think Fragan's in this category as well, they're just sending like kind of a one-page, they are capable of performing the job of firefighter or not capable, and all the kind of detailed background stuff is just kept probably in Fragan's files. Again, we can subpoena that if need be to understand baseline information that was gleaned at the time of hire.
Okay, So Carolyn, just to circle back on this, so do we just need to, if we know it's occurring, right? Do we need to have something coming to the pension board saying this? Or again, is it that we need to get the new pension, the new potential member of the pension to acknowledge that they understand that this could be, that this could preclude them from a potential benefit in the future? Is that all that we really need to achieve here?
I think actually the more important of those two goals, because I think they are two separate goals, one, informing our applicant, but two, having the data somehow documented. I think it's the documentation of the data that's the thing that's important to me. But I'm not discounting letting our members know, like, hey, if you come to this job with, you know, a lung problem, you're not going to be collecting a occupational disease benefit on it. But it sounds like
Jason, really
concerned that maybe.
If I could just jump.
Yeah, go ahead.
I'm sorry. My concern would be maybe down the road where an applicant might say, "Oh, I wasn't aware of this. I wouldn't have participated in this fund if I would have known about this."
Well,
I don't see that being the case, but it's extreme what if.
Well, and just so you know, a firefighter can't waive membership. That it's a mandatory system. They have to participate in the pension fund. So that's not going to ever be an issue. But I can understand a firefighter being kind of dismayed to find out they're not understanding that at the time of hire. But again, they're always eligible for a line of duty. It's just the occupational disease. If you come to the job with any of these, you're out of the box for claiming a disability under this statute.
Okay.
So do you want to leave it in and try to coordinate with your commission and see if this is a form that they could kind of add to their process, or maybe even deal with Fragan directly and say, hey, will you fill out the form and slide it in, keep it with your records?
I think what we'll need to do is sort of give this one some thought. I think we can leave it in right now, and if we're going to have to make, really for me, it's still a question mark how we're going to achieve it. So can I, let me give that one a little bit of thought.
Oh, absolutely.
As I talk more to Jason and Dave and Chris about it. Can you, Jason or Dave, can you tell me the items that are above there, all the documents that we're supposed to be getting from an applicant? So I'm just letting Chris back in. I think he ended up falling out for a second. Hi, Chris.
Melinda,
Yeah.
I know for sure we do not, I mean, this is something we can change, is we do not have the military service records. It's not something that's on our checklist.
So
Fire Police Commission may get the DD 214.
they probably are, because for preference points purposes, they're probably getting that document. And keep in mind that some of these will not be applicable to certain people. So let's say our commission does get some military records, the DD 214, for purposes of preference points. It wouldn't be the end of the world if it doesn't land in our file unless they seek to purchase military service. Then we're going to want a copy of it.
So then so are we then supposed to go back to the Fire and Police Commission to find out the documents that were filed at the time of hiring? Or does it not matter because they're going to have to go back and produce their records for us anyways?
Right. So when they apply for military credit, we would ask for them to produce it again.
Okay. All right. David, is there any other information on this list that when they're starting that we are not asking them for?
No, what's the last one? Relevant dependent parent records.
So in all the years I've done this has never come up, but believe it or not, if we had a firefighter who claimed his parents as dependents because he was taking care of their full financial needs, they potentially could become a beneficiary if the firefighter would pass away. Again, never come up for me, but if there was someone that had that circumstance, we'd be asking for that relevant documentation for the file.
Okay.
So then it looks like we should have everything else. I mean, like you said, we only have 3 guys from the military, which if we want to just put that on our checklist to get the DD 214s, we can do that moving forward. And I mean, I could track down the other 3 guys to get their copies.
Yeah, and only if they sought the military service would probably be the only reason we need them. So don't feel like you have to knock your socks off for them.
Okay, sounds good.
Yep, I think, right, so I think that sounds probably like a better way to go, maybe, on that one.
Mm-hmm.
Or maybe, Dave, it is something to capture, do they have prior military service, just so that you would know how many could at some point, and maybe not get those records if we don't need them right now. I'll let you.
Yeah, I mean, I don't think it'll be a big deal either way. I
Okay.
know for a fact, one of our guys was asking, I think I mentioned it to Melinda, about what it would cost for him to buy that military time. So, to track it down now and have it in our file wouldn't be too much of a task. So I think, it's something I could do.
Okay.
And I did notice on this page that some cities should be villages, and I've marked those too.
Oh, yeah, I figure that's just a wholesale thing you'll do at some point in time.
Yeah, I try to proofread these really carefully, and sometimes they get missed. Yeah.
Okay. And so thanks for your time on that. I'm done, unless somebody else has a question about this. Okay.
All right. The next thing I have is not until we get to 2.03. So if there was anything on 2.02 on combined service or IMRF transfer, we could talk about it.
I don't.
Okay. All right. So then that takes us to 2.03, determination of continued eligibility for benefits. So I had just some modifications that had been in the prior set of these. One being that we would have these annual affidavits that were required to be returned within 30 days. And I just switched that to a deadline set by the board. But I think I should ask you as an initial matter, are you doing annual affidavits of eligibility?
So we just have the one with Lance?
So that one is our one for a disabled member, but this is contemplating affidavits of eligibility for anyone who's drawing a benefit. So it would be retirees, surviving spouses, if there were minor children receiving benefits that weren't otherwise covered by a retiree or a survivor spouse.
I don't think we are.
Okay. So I know it's some work, but I would recommend you start getting in the habit of doing these. And it's just, it's really an anti-fraud device, not something required by statute, but it's just to make sure that we're keeping track of our individuals. Where are they living? Any updated information in regards to, ways to contact them. And then we require that they be notarized. Now, this last year in the pandemic, most boards are just waiving that requirement. But from time to time, we do uncover just some unusual circumstances, like, for example, older individuals who are not handling their own financial affairs anymore, that they've got someone who has taken over financial affairs, whether it's the next door neighbor or an adult child that's helping them. So really up to you, but and maybe don't feel like you have to implement this right away. Maybe kind of take a breather in 2021, and then when you're ready to take on this project, maybe pick it up post-pandemic and start being in a habit of sending these out once a year. And you're going to want to prepare your individuals too, because the first time they receive these annual affidavits, it kind of throws them for a loop. They get confused sometimes. Why do we have to fill this out? Are you saying you're taking our benefits away? What is this all about? But it's just been a way of just making sure people are still alive, they're living where we believe they're living, that they're still in charge of their financial affairs. If we need to get updated information about powers of attorney, that we're cognizant of these things. And I think it's just becoming a bigger issue with our people living longer.
Okay.
Do we have an annual communication to the beneficiaries at this time?
Chris, I'm sorry, I didn't follow you. Do we have a what?
Do we have any type of annual communication with the beneficiaries other than sending them a check?
I believe Diane Anderson, but who is retiring at the end of this year, does have a retiree mail list and newsletter she sends out. So before she leaves, I can find out exactly where all this information is, who she's sending it to, and we can cross-reference with our fund and make sure before any transition happens that we get all those records and we can maybe start our own. Is
Diane going to be replaced?
I believe she is. I mean, I sure hope so. But
Okay.
currently we haven't really heard anything. She's been working remotely since this pandemic.
Right.
So all the calls are forwarded. So, I mean, I'm not exactly sure where they are in the hiring process or in the interview process, but it's above my pay grade.
So the only other thing then, Chris, is obviously we're sending them any like W-2, that kind of stuff, and the annual increase. We send that to them.
Mm-hmm.
Okay.
And it could be a bundled mailing that goes with some of those things.
And that's what I was thinking.
Yeah. And, again, the first time you do it, and I've written these memos because I literally have been at board meetings where when a fund implements it for the first time, some retirees will come to the board members with flamethrowers and torches and a lot of anger about having to fill these things out. We've even gotten to the point where we've sent the retiree to the retiree breakfast, made sure they're a notary so they can, handle the paperwork. So at first they see it as a inconvenience, but it really is to protect the fund that we don't allow benefits to continue to be issued in situations where someone may have passed away that we weren't notified about, or when there is an outside person starting to handle financial affairs that may or may not be acting in the best interest of the individual. My first time having to help a fund report fraud to the state's attorney was in Cook County, and it was a circumstance of a firefighter whose purported well-meaning neighbor was actually converting his benefits to her own use. So that's why we just want to have a handle on where are they, who's handling their affairs, and that they're legitimately receiving their benefits. The rest of that provision does talk to the issues of the disabled members, which you have been doing, the annual medical exam. There was a state law change, it's now been a couple of years ago, that if we would have someone that's receiving disability benefits for a mental disability, the board can choose after age 45 to discontinue the annual verification of those disabilities, and it's actually specific to post-traumatic stress disorder. But that's a board decision. It can be made on a case-by-case basis. But I've added it in here so we don't lose track of that fact that we can, waive those annual exams going forward in those limited circumstances. One thing else I wanted to note about this provision is I do have a piece in regards to the continued eligibility piece, that if we can't track down a member, we've sent out the annual affidavit, they don't respond. We send it out again, they don't respond. We can't track them down. We can never stop someone's benefit. We can't terminate a benefit without notice and for good cause, but we can certainly convert someone off a direct deposit to a live check and hold it over at Village Hall until we can get our member to submit the annual affidavit. And again, this is just to prevent money going out the door before we can get a handle on what's going on. And again, it typically happens in situations of people who can't handle their financial affairs anymore. Okay, so that is all I have on 2.03. My next change is in 2.04. And it really is the addition of this secondary employer reporting, which I'm going to guess it might not come up for you. Do you have any of your firefighters working secondary employment in the fire service?
Yeah. We do.
Okay. So have you been getting any of those reporting documents from the secondary employers?
We every year we have to fill out a secondary employment saying where they work. And I know there's a few guys that do have secondary fire employment. So okay. I don't know if we're getting any other documents from that employer, but I know they just state who they're working for.
And it is a relatively new requirement. So, as time progresses, we might want to, if we feel like we're not receiving information from these other employers where our full-time firefighters are working part-time in secondary employment, then we may have to become more proactive and contact these departments or districts, or have our member who are working there to remind their secondary employer of the legal obligation they are to report not only information in regards to how much in wages they've made at that secondary employment, but also if they've been hurt or injured or had an exposure on that secondary employment. And those are just documents that we'll keep in their file as we receive them. And the reporting is on the fiscal year of the secondary employer, so they could show up any time of year, not necessarily, neatly at the end of the calendar year.
Dave, are those in both the pension files and their personnel files?
The secondary employment there's nothing in the pension files. I will look into that and find out where the chief puts those. I don't believe we're getting W-2s of how many hours they work, because I know we have some guys that work a lot of hours at outside departments. So I'm actually not sure where all that goes. So I will look into that when I'm at work.
And I imagine the chief is, in the fire department, is just tracking secondary employment just as an awareness issue. So he probably has that data.
I thought that was it was a village, from the village administration standpoint. I don't know if it was necessarily the fire chief. I thought that all went back to
the assistant village manager. Goes back to the assistant village manager, I believe, as the HR officer.
Yeah.
We had one disability. Richard Yohe went out on a cardiac disability on a Northfield fire response.
So yeah, it's kind of probably two components. One, the department probably just wants to know what secondary employment is occurring, but then from the statutory piece, there is a reporting requirement from the secondary employer directly to the pension fund. So, and that's what this piece is. And like I said, it's relatively new.
So really,
we don't have to request.
It's not sufficient that it just goes to the village.
Correct. It needs to come to the pension fund so that we've got that information and awareness if they would seek disability, that they've been working that second job, so that, we follow up with subpoenas and we have exposure information purportedly being provided to us by the secondary employer.
Okay.
All right.
Should I just jump in and say I've got a hard stop at 5 o'clock? So
we should pick up the pace.
Yeah, or somebody else can be president pro tem, because that's covered in the rules.
There you go. My next thing that I wanted to note is section 207 on abandoned property. This is a brand new provision, so a brand new policy for you. It probably won't come up very often, but it's those circumstances if we have someone who has we've lost touch of, and we have either contributions to return to that individual or some benefits to distribute, and we can't track down where they are to distribute them. We have a reporting obligation then to the state treasurer. And this is after we've exhausted a lot more of our own efforts to track down the individual. So that's what 2.07 is all about. Like I said, in most cases, we're going to be able to track the person down and distribute the benefits. A lot of times it's just a firefighter who's gone to a different job and not bothered to submit the refund application. And then just lastly, in the section on credit for military service, I did make a change so it's crystal clear, because this has come up too. If we start a payment plan for someone to purchase military service, and it's typically for that 2 years of military service that they can purchase prior to becoming a firefighter, because it's kind of a costly endeavor. Once we put them on a payment plan and locked in what the interest rate that's going to be applicable is, which goes back to the actuarial assumed rate of return, it's locked in. So even if we change our actuarial assumption, we're not changing their payment plan assumption. It's already locked in. And that actually has come up, and that was probably a change I should have thought of originally. So this takes us to chapter 3, and I just have a couple things in chapter 3 to note. So I'm going to flip by 301 and 302 unless anybody had any questions on those sections, which takes us to 3.03 on hearings. And I did do a little bit of work on this. I did put a little bit more into this provision in regards to interventions, and I didn't want to make it super elaborate, but I did want that any petition that we would entertain from the village come to us 25 days prior to hearing. And the idea is that once we get close to going to hearing, we would want to address those intervention petitions before we have already committed to all the hearing dates and getting everyone available. So that's they can be received at any time, but we just want them no later than 25 days prior to hearing. Now, that said, we can always waive the rule under whatever circumstances may present themselves, but that's something we'd want to communicate with the village so that they're aware of our rule on that. The other thing I did to this section was to add a provision on interim award of benefits. So by state law, there's no provision that talks about either interim awards or bifurcating a disability hearing. But I have found that in some circumstances, particularly if the question of whether someone's entitled to a line of duty or an occupational disease benefit, those hearings can turn into a very elongated processes that require multiple days of hearing and over a period of several months. What happens, however, is it can be a bit of a financial hardship to our applicant. So this provision that I've added on an interim award is simply for those limited circumstances where we have already received the 3 IME medical reports from our physicians. All 3 of those doctors have agreed that the applicant is disabled and the disability is permanent, such that 2 of the 3 questions have been answered for, the line of duty benefit. We can make the decision to award an interim award of a non-duty benefit so that the applicant can start receive that interim award while we continue the hearing process on the second question, which is it job related? Again, this is a may, like you're not obligated to do this. You can make a case-by-case determination, but sometimes it provides a little bit of a breathing room such that you don't feel like you're prejudicing your applicant, but allowing for a process to be more thoroughly vetted before you make a decision on the line of duty or occupational benefit.
So that would be something, to your point, all we're doing is laying the groundwork to allow us to do it. We do not have to do it.
That's correct. That's correct. And then in section 3.09, unless anybody's got questions on those other policies, and the Quildro policy is quite lengthy, all statutory, so you want to flip by that. And on section 309 on benefit corrections, this has been modified to acknowledge the things that we have now learned from the new administrative code provisions that the Department of Insurance promulgated early last year. And that is, if we would make a benefit mistake where we underpaid a retiree or a beneficiary, and we have to make up the underpayment in a lump sum to them, the applicable interest rate is 1%. And this was welcome news because previously there was a Department of Insurance advisory opinion that said it was going to be 6%. So the applicable interest rate now by administrative code is 1%. The other thing that this new administrative code provision does is if we discover a mistake and we make our adjustment or our correction to it, we have an obligation to notify the Department of Insurance that we did find and adjust a benefit within 45 days after we take that action. So that's now added to your policy.
And then that's 45 days by statute?
45 days by administrative code provision. And DOI is all over benefit mistakes these days. This is one of their bugaboos, is benefit corrections and getting those benefits set correctly. And then my last 3 changes are in chapter 4. 4.02 change was just simply acknowledging the annual statement. That was a section that I just addressed the audit issues, but I added annual statement to it to acknowledge that we are doing those annually. In 4.04.
Can I stop you? Can we go to 4.01?
Oh, sure.
So the pension board isn't doing right now an annual tax levy request because that's being worked on by the village.
So
this isn't, so it's not like they're doing the calculation, the levy calculation and giving it to the village. It's kind of the other way around.
So my position on this has been, well, let's do the easy part first. So the pension fund by statute is under an obligation to promulgate that municipal compliance report, or the tax levy report, I think is how it's framed in the statute. And that's that one with that very elongated list of things that must be in that municipal compliance report, which ironically just came out of your investment policy. That was one of those corrections Tom made today. So that municipal compliance report is to be prepared, is to be certified by the pension board, and and provided to the village board prior to the date at which they adopt their tax levy for the year. The second piece to this.
So that doesn't occur right now.
Okay,
Right.
so you'll need to start doing that.
Because really, all of this is predicated, everything that's happened thus far has been predicated on what is done as part of the actuary reporting.
Right.
And then the work that the village has done in terms of looking at a better way to fund the pension systems. That's really what has been happening.
Right.
So I'm going to step back and I'm going to let you then talk to me about what
else this is all about. Right. So it's my opinion, the way that we can view how the statutes are drafted and in consideration of our fiduciary responsibility, that the pension board should be making a formal request of the village to properly fund it. It's in your situation and in most situations, it's going to be based on that actuarial valuation that the village has directed be prepared.
Mm-hmm.
And so it's going to be presented to the pension board as the village has gotten this actuarial report together. Here, pension board, here it is for your review. And what I contemplate then is that then the pension board review it and request that the village make the levy and the contribution based on that valuation that's been promulgated, and then certifying that municipal compliance report that complements it with all the basically the financial data that comes out of that actuarial valuation. And the reason I have my boards do that is it documents probably the most important fiduciary responsibility you have, which is to make sure you're being properly funded. You only have the ability to ask, and certainly you could certainly intercept, but that's never going to be an issue here. But it's to document that you engage in your fiduciary responsibility to the extent that you have control over this process, because in the end, the village has the discretion to levy and contribute based on any valuation that's been prepared, whether it's department insurance or the village actuary, or if there was even a third actuary involved. But again, it's there. This, for me, this is part of the process of documenting your fiduciary responsibility to ensure that you're properly funded.
Okay.
And so if someday someone came back and said, hey, it's 20 years later and we've run out of money, who should we sue? Hey, how about that board that was in place 20 years ago that completely blew off, making sure we were properly funded and the village wasn't putting any money into the fund? Now that's an extreme example, but it's again just it's a process, documenting your process and the fiduciary duty that you have to at least ask for proper funding. So that's what that's all about.
It was done in the past. It was discontinued by one of the presidents of the village.
Okay. Well, we can get back in the habit next year. And those municipal compliance reports, Lauterbach and Sickage both have nice templates. I can always share those with you, Melinda, if you want to just create them in-house. They're pretty easy to pull together once you've seen a nice spreadsheet.
Okay. If you wouldn't, I would appreciate it. Thank you.
Yeah, happy to do that. And then otherwise, small things to 1.04, which is benefits and expenditures. I've just added fleshing out some citations to the definition of pensionable salary, which actually comes from the Illinois Administrative Code provisions. And then, of course, as we noted earlier in the meeting, I added the Illinois Sustainable Investing Act language to 4.05 on investments. Once we get through the consolidation process, a couple of these policies are going to go away or be modified. So, for example, 4.06, once you no longer have control of those assets, we'll probably remove this section altogether. And that is really the highlights of the things that have happened to this draft since last time you saw it last summer. And if you would like, I can make these revisions, let you see another draft, and I can date it for your January, is it your January meeting or your February meeting? For January, for final approval, if that sounds good to you.
And that would be my preference.
And that way you can take one last eyeball at it and make sure we got it all cleaned up just as we discussed today, and then final approval in January.
And you'll change all the references to city to village?
Yeah, I'm surprised that happened because I thought and you know what happens sometimes, I think starting with the track and change, we get so far and then for some reason it dropped off because the early parts of this have village. So I'll make sure those all get corrected.
Will we be able to see the forms?
Yeah, the forms you're going to have before the end of the year as well. We decided to put those in a different software because we're making them fillable and they're going to look a lot more professional too.
All right.
All right, well then, thank you, Carolyn, for all your work on this. I don't believe there's any action called for this because we're not adopting board rules or seeking their approval. We're going to have you revise them, revise the resolution, revise the dated for the January meeting. Melinda can get you that, and we'll put that on for approval for the January meeting. Does that make sense?
Sounds good. And thank you, board, for your patience with me on this project. It's a big undertaking, but it's so important. And I think especially once you have the forms in place, you'll just feel good that we've got just a good document going forward that will be easy for us to update as we need to.
All right, Melinda, you might want to go over section 4.01 with Mike and Eric.
Yes.
All right. Okay. Does anyone have anything else, Dave or Jason?
Nothing.
Nope.
All right. Then we're leaving item E on the table. We will table well, let's just get a motion to table the investment policy. The board rule approval. Let's table that to the January meeting. Mark makes the motion. Melinda second. Jason calls roll.
Mr. Canning.
Aye.
Mr. Gajewski.
Aye.
Ms. Malloy.
Aye.
Mr. Mitchell.
Aye.
Mr. Weglars. Aye.
Okay, so this item is tabled to our January meeting. And then with nothing else, Melinda, I don't see anything else. I think we ought to go to adjournment.
We should really quick though, Chris,
right, the letter to the audit letter.
Yep. So we have everything together. I think the one piece I wanted to ask about really quick is that we were able to get the signed off documents from the applicants that they had noted in the letter that we weren't originally able to produce. Now we went after and we've gotten that done. Should we change our letter to say, yes, you're correct, we couldn't produce them initially, but we have corrected it? Like, should that be part of what we're?
Yeah, I would say let's document it that we have sought and obtained replacement applications for those that were missing from our files.
Okay, so all right, so we will make that change then to the letter. But I think, Chris, we have everything else at least. Dave, are you remembering anything else that we needed?
No, I think everything on that list we got over there.
Yeah, and I thought it had been addressed. And do you have all the signatures you need, Melinda?
I did. I was able to get everyone's signature, so that's all done.
Okay.
And what I'm going to need, the only signature I'm going to need to get is going to be Dave's signature on the letter. I think when we're sending it back, there was a spot that the secretary had to sign by themselves. I think that was the one item that might be left outstanding. Yeah, the draft letter, it needed to come back from Dave because it was addressed to him. So I think we just need to get his signature on that page.
And then Melinda, do you have it in Word that you can make that small correction that we described about the applications?
I think so. Did you send me everything in Word?
I think
it's in Word.
Yeah. Okay. So you go ahead and change it at your end so you can be more nimble.
I will do that. What was the verbiage that you just said?
That the replacement applications for membership have been obtained and placed in the members' files. Something to that reflect. Because I will call them replacement applications because we probably did have them. They just didn't. They got lost.
Okay, we'll do that. All right.
Melinda, I just sent you the latest, or what I think is the latest version, just so it's at the top of your email list.
Okay. I think otherwise we are good because we have all the training material. We had the trustees sign everything. We got the information from both Morgan Stanley and North Shore, the bank signature stuff, so that's all done. So I think we're in good shape.
Okay, in light of that, then Mark makes a motion to adjourn, seconded by Melinda. Jason, call roll.
Mr. Canning,
Aye.
Mr. Krajewski,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Weglars, aye.
Okay, before I say we stand adjourned, let the record reflect that our training is at 5.5 hours.
5.5 hours, got it.
Yep. Okay, thanks, everybody. Thank you very much, Carolyn. Good to see you.
Yeah, good to see all
I
of
gotta
you.
run, everybody. Have a good night.
Yep, you too. Bye-bye.
Bye-bye.
Bye.
Thank you.